Zoom user. You know you can change your name, hala, right?
Oh, I'm aware. I just haven't done that.
You know, no time like the present.
For sure, for sure. How are you today?
Outstanding. How are you today, Devil Dog?
Amazing.
Feeling semper, feeling fi.
Yep. I guess that's the way to sum it up.
Mr. Evans, good morning to
Oh
you.
no,
Right.
good morning.
Should I say
Afternoon.
afternoon? Is that Alan?
Yes, sir. That is
Welcome to the show.
Thank you. Thank you. Appreciate you.
Yeah, good to have you here. What's up, Truett?
Hey,
Hi. Courtney always sounds like she's been dragged to church. It's like, hey, rather be sleeping off a hangover. Hey,
Who told you?
Mr. Doust.
Hey, Pizza Hut's calling me.
That's unusual.
Look at this. Not even joking.
I can't really see it. The auto blur is.
Dang it, Blur.
Yeah, I see Pizza Hut, huh? For real.
Just some random. That's wild.
Hmm.
I need to get pizza for dinner tonight.
Maybe they're trying to get you to buy a franchise.
It could be.
Yeah.
I've definitely clicked on enough of those.
Is Tawanda jumping on? Not all kick off the show without her, but I was waiting for her. So
Like
let's
your
talk about Kayla and Isaiah. This is their RPA we're working on.
like your background, Matt.
Thanks, buddy.
I really like the red and the blue. It almost looks like a snow cone.
I see what you did there. Yeah, I like it. Courtney
Cool.
likes the distinct red and blue, so I put that on the website, but this is for YouTube.
I think it's great.
I think it's great too. I'm a fan.
I
You know what
think
I'm
that
not?
looks good on your black background. That's perfect for that.
Hey, I won one. Yes.
Even though I'm not the biggest fan, but he does look good on that background.
Score one for Matt.
Tell you what, I'm not a fan of. It's driving from Oxnard to anywhere through LA. Because that was awful.
You don't love that? It's not your favorite?
No, I didn't, Matt. I know you said that LA traffic is better than San Diego traffic, but I think you were high when you made that statement. I don't think it's accurate. And I
Nope.
disagree. I mean, there was beeping everywhere, people trying to run people off the road. It was ridiculous. So I don't know if all of the San Diegans just decided to be up there this weekend, but
That's what it was.
yeah, I bet it's awful. Even better with two kids in the car.
How was your time in Oxnard though?
It was a great meeting. I didn't spend too much time in Oxnard, but
Okay.
it was a good meeting. I don't think anything will come of it, but just a good experience to just get out there and actually talk with the seller and uh, go through the motions of that and just kind of understand what that would look like if it did work with his. I just think that what he wants for it just it wouldn't pan out.
Ah, okay. I was gonna say it's not like he turned you down. It's just his offer wasn't that great.
Yeah, he's just got he wants like 900 for it, and it's not awful. He just yeah, there's just not enough meat on it for me. That's all.
900,000?
Yeah.
Damn, that's a big business. I thought you were shooting for something far smaller.
No, I kind of want something with some of the things in place. I mean, it's not bad. The issue is that he's still involved with some of the stuff.
Mhm.
He's got a couple of per diem CPAs, which is fine. In fact, great because he doesn't have to do too much of the work himself.
Nice. Good.
The downside is they're all old, so they'll probably be retiring soon too. Which for me puts a unnecessary risk that I'm just not willing to take
Yeah.
on.
I mean, that's like buying a factory with ancient equipment. It's gonna
Yeah,
go anytime. So
yeah,
you got to plan to replace that at market rates.
yeah.
Yeah, unless he
So
bakes that into the price. No.
yeah.
Okay, real quick, Dom, walk me through this loan sheet. Let's explain it to the kids.
Cool. All determining rate. Right. So I'm sure you guys are familiar with all of that information. I don't think I need to go through that part, but as far as fees and stuff goes into breaking down, it's out at the top left, lender fees. So there's two fees there. Sometimes you'll see additional fees. Could be all kinds of things: processing fees, admin fees, funding fees. Realistically, everything that's in there is just a lender fee. It kind of all pools into one thing, and they just name it something else to make people feel better.
Yeah.
The one
So
thing that's
basically,
different,
this is the upfront money that the lender makes when they write the loan.
yeah. Um, the one thing that's kind of different out of all of those is the loan amount, or excuse me, the points that is written on there. So this one's 0.749. Um, that I mean, the lender makes that money, but or it is a fee for them, but it's basically you buying the rate down. Um, that's what that is. So I don't know if you guys are familiar with that or not. Do you want me to go over
Assume
that?
they're not. Assume they know
Got it.
nothing about anything.
Cool. So a lender will give you a what's called a par rate. Your par rate is this is the cost to get this rate. It's generally as close to zero or at zero to get, say, I think this one was 7%. So to get 7%, there's no points that need to be paid. Points can move in either direction. You can either pay points to decrease your total rate, or you can receive points, but you take a higher rate to do that. Sometimes it makes sense to do that for people that don't have the cash. So you're just basically borrowing from the lender to cover up some of your closing costs. Um, that is outside of your VA loan 4%. Or uh, you want a lower rate because you need to qualify, or you just feel more comfortable with a lower payment. So you would pay points to buy the rate down from where the close to zero or as close to zero rate is, as in this one is at 7%. Important information about it, it does not directly correlate. So as you see, this rate is 6.5%, and you're paying 0.749% of the loan amount to get to that 6.5%. So if you wanted
So
to go
real
down to
quick,
say,
Dom, this person in this situation that we're looking at right here, they wouldn't just rate 6.5% walking up. The only
correct,
way that you can afford to give them a 6.5% rate is if they pay some money up front to get it.
that's right.
And that's why they're paying that 0.749 down here.
Yep,
In other words, they would usually if they didn't have any points here, like say that was just $0.
yep,
They're not getting any money from you, they're not paying you any money.
yep,
Their rate up here would be more like 7% or
that's
six
correct.
some five. Okay. Got it.
Yep,
And you said it goes the other way around, right? So in this case, they're paying you some money to get this lower rate, but you can also, let's just say 7% was their normal number. If they needed cash from you, you would just jack this up to like 7.5. You'd go the other way.
right.
And then this would be money that you send over to them. So it would be
Yep,
points you pay the buyer.
that's correct.
And they could use that money only for the transaction, right?
That's correct.
Got it. So they can't just
Yeah,
like pad their pockets with that or go to Vegas.
right. And it's not going to be it's usually not as like good, right? So you have to pay 0.79 to go ahead and go down to 6.5 here. It's not usually as good the other way around. It's not
So if
as
they're
bad.
trying to get money from the lender's stingy about giving them
That's
cash.
right. Yeah, they'll give you something. I mean, you can absolutely pay a higher interest rate and they will give you stuff. It's just not normally as good because they know
Yeah.
that you're likely gonna, especially a VA loan, you're likely gonna refinance doing an Earl, you
Yeah.
know, 8-9 months down the road. So
Got it. So what, to put it into practical terms, say they were at a 7 and they
Mhm.
wanted some money from you, they might go up to a 7.5, but only get like $2,000.
right.
Whereas they're paying you 4,000 to get that half a point. But if you're going to
Yep.
give them money, you'd give them like maybe far less than that, 1,000 or
Correct.
2,000 or something.
Yeah. They got to protect their upside and downside because if you did, not make your payments for whatever reason afterwards, I mean, there's risk that they're taking too for that.
Yeah.
So they just got to hedge against that.
Let's take this opportunity real quick to talk about people who are shopping out lenders. So something that I deal with a lot of the time is, I'll connect somebody to you and then they'll go talk to abclending.com and they'll be like, oh, well, abclending.com gave me a blankety blank rate. They gave me a better rate.
Yeah.
But 9 times out of 10, they're not giving them a better par rate. They're just
Right.
showing them a
A better
better
number.
rate with higher points.
Right.
So what we got
Yeah.
to do is say, hey, that's fantastic. I'm so glad they gave you a 6% rate. How much is your closing cost, right? That's the magic question. How much are they charging you for it?
That's
And I
that's
don't,
always the first thing that we got to look at is where are they and then where are they making up fees, right? Because again, basically anything that's in this box, the lender's going to utilize towards their costs and stuff. So even though this says 4,200, but their underwriting fee is 1195. Some other places would say, okay, well, it's 3,900, but your underwriting fee is 1,500. So I mean, it basically all falls on the same box. They just got it separated out.
got it. Have you seen ways that they hide this dollar value somewhere else in all this bundle?
Uh, no. The rest of those are separated out for what they are, right? So third party fees, um, prepaids, taxes, all that's separated out
Mhm.
into everyone else getting their hands in the pocket too.
Got it. So you
Um,
haven't ever seen a situation where a lender was like, "Hey, I'm not going to charge you the points here," but then like you see that let's see, some other fee in here gets like plussed up somewhere, like an appraisal fee or something, or
yeah,
I don't know, nothing like that. But
no, because all of those, go ahead.
what about for escrow companies? Do they do that? Do they tuck some money in? Because I see
Oh
we
yeah,
got
yeah,
escrow.
escrow companies definitely do. I mean, they add in, but they're doing the same thing, right? So you'll see their settlement agent fee, their notary fee, and and you get your title search fee. But then you'll see, I don't know, all kinds of different fees that they tack
Like they
on.
come up with these like custom line items, right?
Yeah,
Like, oh, we only
whatever.
charge $1,000 for our service, but then it's like, oh, but we've got this like, unnamed bonus fee that's $1,000 I didn't tell you about.
Right. Or they'll charge you a little bit extra on a notary. Like this one says 250. Someone might charge you $300, but it's an in-house person that's doing it, the same settlement agent
Right.
that's doing it, right?
Right. They're not paying a
Uh,
third party. They're just putting that in their pocket.
right.
Got it.
So
So
yeah,
with
that definitely happens.
lenders, you can't hide it. You got to put it here, or else you're in big trouble, right?
Yes, the only other place that you'd hide it would be the lender just uh having a higher interest rate, right? Because that's how we get paid is through the lender. So if it's a higher interest rate, the brokerage might be making more because of that.
Got it. So you're kind of making money from two different sources. You got the points, but the points only offset the interest rate. So that's not where
Yeah,
you're, as a lender, making any
right.
money. You're making money only like a commission on the total loan value or something like
That's
that, right?
correct.
Got it.
Yep.
Got
And again, there's people that will charge you like you might see something called the loan origination fee in here. If you go on to maybe fed.com, they'll say, hey, our loan origination fee is 1%, right? A lot of people would do 1%. But and then realistically they'll make it up somewhere else. Either they'll charge you discount points here, there'll be additional fees and whatnot pulled out. Um, it's sort of it's all exists. Those are the two places you'll see it is either in the rate itself, they'll charge a higher rate, or
it.
those separated out here. It's just where are you going to get your money from?
Got it. And that origination fee, will we ever see it listed under lender fees?
Yes, it'll be right there to say origination fee, and
Got
it'll
it.
tell you how much it is.
And that would go to the lender in addition to their commission, right?
So that'll go to the lender, and then the lender pays specified commission based on whether the loan's a lender paid loan or borrower paid loan. But usually around 2% is where that boils out to, whether
Okay.
you see it there or if it's in the rate.
When I say lender, I'm thinking loan officer. So like the loan officer, does a loan officer ever make the loan origination fee, or just the lending company makes the loan origination fee?
Um, it's hard to explain that, but basically all of the money gets put into a pot, and then
And then whatever split from the company gets figured out for
yeah,
the loan officer.
exactly. So
Okay.
it's basically just either you put it in this piece or you put it in the rate piece.
Okay.
Um, and then then like generally on my stuff, I get 2% of the loans.
Got it.
So could I charge more? Yeah. Could I take less? Yeah, it's the same as your guys' commissions too. So
Yeah.
it's just where do we want to be? And Matt will tell you on my side, I'm here to help veterans. If I have to take less to make a deal happen, I'm more than happy to do that. But
Which
if
is
I can make
which
my
is
full
a
commission,
great next point actually. So how much can you afford to chip in if something goes south with a loan typically?
I mean, the reality is it just depends. Um, again, 99% of the time when I go into it, I'm just trying to make 2%. Sometimes if I know we're going to get a ton of commission from the seller's going to be absolutely okay with it. Cool, let's try for 2.25, right? Um, I could give up that whole commission if I wanted to. There's just as you guys could on your end, and it's just how much money do I want to get paid and work? So,
Yeah.
um,
Well, we
so
have like regulations, right? We can't give the whole necessarily the whole commission away because we got
yeah,
to run it through a broker. Like,
yeah.
do you have the same limitations?
Um, I have I have expenses that I have to pay to my broker, but it's not a crazy amount. It's usually somewhere around 2 grand
Okay.
that I have to pay the broker.
On
So,
each
I mean, we could,
transaction, or
yeah, per transaction.
so as long as you clear their 2 grand, anything after that you can afford to give away, which you don't want
Yeah.
to, but you
If
could if you had
yeah,
to.
if I want to work totally for free on it,
Yeah.
yes.
All the stress and none of the reward. Yay.
Right. And that's up to a certain point as well, right? So like this one is just we're just doing 2% on this one.
Yeah.
Because obviously I like these guys and we know them and everything. I'm not trying to it sounds bad, but I'm not trying to gouge them, right? So
Yeah.
I feel 2% is very fair for what I do, and I think that most other loan officers do about the same. There's some big box, and that's where you'll see some of the big box guys that are oh, we have better rates and what have you. And sometimes they do, right? Because they're paying their guys minimum wage or whatever it is to take all these inbound calls. And then instead of running at 2%, they might be doing it at 1% or 1.5. So
Yeah.
those exist. And the thing I'd say about that is, do I have the best rates absolutely out there? No. Do I have very competitive rates? Yeah.
Yeah.
So you got to figure there's three things you can get. You have you have speed and timeliness, making sure you close on time. You have rate and you have service. So you can usually get about two to three of those, or excuse me, one to two of them, but you really
Hard to
can't
get
get
all
three out
three.
of three anywhere.
Yeah.
So obviously, most of the time, I know this weekend wasn't perfect. Weekend times, I'm not 100% able to get back on time, but during the week, I'm usually pretty available.
Look, and nobody's like generally nobody's expecting a lender to like pump out loans over the weekend. They're expecting real estate agents
Right.
to make calls to get deals done, to,
Yeah.
work their magic with listing agents. They're expecting us to show homes, but lenders, like, the banks are 9 to 5. There's nothing you can do. No one's writing a
Right.
check on Sunday afternoon. So,
Exactly.
all right. Now, we would like to know, like, if there's a way, we can get uh an adjusted pre-approval or something thrown together. That way we can get an offer in on Sunday evening, maybe, but generally try not to beat you up with that too much. But it's
Yeah.
okay. Some things in real estate can wait until business hours start.
Yep. And that's generally the goal. I mean, if I don't have too much going on, obviously I try and get there. But
Yeah.
we had the Oxford driving this weekend and
Mhm.
dealing with all of
This
that
was opening.
stuff.
This was opening weekend for this house. Like they're not even looking at offers until like
Right.
tomorrow anyway.
Yeah, yeah.
They'd be
And that's the
stupid
other
if
thing
they
too.
did.
If you're like, hey, Super 911, like I obviously generally try and do my best.
Yeah.
Hardest time
Pull
is
over
when,
at Disneyland and hey,
yeah,
honey, hang on a
I
second.
do it. I do it all the time because as you know, we go out to Disney all the time. So yeah, you can ask Mike. I mean, I've literally answered phone calls sitting in line in Disney and just
Yeah.
ripped out one of these bad boys for him. So
Shit, you got time. Those lines are not short.
or brutal,
Yeah, they
brutal
move
lines.
Excuse
quick.
me,
Don't
Matt.
get me wrong, but they are long.
Yeah.
So another question I got for
Excuse
you.
me, Matt.
So,
Okay.
oh, Alan, yeah, go
Oh,
for it.
I apologize. If I may, I had a question about the points on the
Yeah.
lender's fees.
What you got?
So how do you come up with the number, the 0.749%? Is that the buyer's credit scores, or how that get affected? I mean, how you set it up?
Yeah, great question. So the par rate is going to be where you're going to figure out that's based on the buyer's credit score and all of the other pieces that go into it. So these are called loan level pricing adjusters. Um, so basically, they say the lender will say, "Hey, our rate is I don't know, we'll call it 6%," and then they'll add and subtract to that percentage based on various factors. So that will be the first thing and biggest thing is always going to be your credit score and where those are. So obviously a good credit score might decrease it, and then other factors might increase it. Things that would increase it would be less down payment. VA loan, you're not going to see a lot of these different LLPAs, um, loan level pricing adjusters, but they can exist. So your biggest ones are going to be your credit score. You'll see it for condos that'll get added onto there, and any attached structures. So townhomes will sometimes have them as well. Um, but that's how they determine your par price. As far as what that discount, because it's called a discount point when you're going down. Um, as far as that number comes in, it's a secondary marketing that they do, and they're kind of hedging against what's going to happen with that loan. So the lender is gonna borrow the money from the Fed, generally speaking, at whatever that rate is, 5%, 6%, whatever they're able to borrow the money at. And then they're making this offering to the client to get this loan. They do all kinds of crazy quantitative analysis on it to figure out what they as a company can afford to offer the rate out at based on the different levels of risk. And they determine, hey, this is my number. It's not it doesn't correlate. So as you see, I think the par was about 7% on this one, and we went down 0.5%, but the cost to get to it is 0.749. That's just a number that the lender says, hey, this is the amount of interest I need to receive upfront for you to take this interest rate for me to hedge against if you were to refinance because rates are going to go down, if you're not going to make payments, et cetera, things like that. If you needed, say, a 6%, I think for this one it was like 1.79 for you to get that. So the farther down you go, the closer to whatever it is that they're borrowing their money at, the more expensive it's going to cost because then they're going to have to rehedge against that new money down the road. Does that answer the question?
Yes. So, I mean, as a realtor, you don't want to get too deep into the weeds, right? As far as like the numbers
Right.
are concerned, we just trusting you that my customer will get the best possible rate because of his credit score, like you said, and
Yep.
have a means of
Yep.
money wise.
Yeah, and the other thing to remember, I mean, these rates exist. When I send them over, as of like right this minute, they change constantly. Not only every day, but even intraday as things happen, as the Fed makes announcements, as Trump makes announcements about new tariffs or tariffs being pulled back, whatever. I mean, you see giant swings in the market. Um, so any big swings in the market are going to cause them to do what's called a repricing. So I sent this morning. There's a possibility that there's a repricing this afternoon, and it's either more or less. This is really at this point, at this stage, as you're preparing the purchase agreement, as you're submitting offers, this is to get an idea of what you can expect. But that could, I mean, literally tomorrow come back and be a point higher, 1% higher. Um, it's unlikely it's going to move that much, but it could change each and every day. And until you lock the rate in, so there's two things: you either lock or float. We're right now floating because we don't have a property picked out. 99% of the time, you're going to float until you actually have a purchase agreement locked in. Um, that's the way most lenders will do it.
As you said it, the numbers fluctuate, so you don't want to lock it until obviously the
Yeah,
properties are chosen.
yeah, because when you lock it, you're locking it for a set period of time as well, right? So generally, you'll lock it for a 30-day period of time, and you're locking it. So it doesn't change anything on your end. On my side, it makes me and my company look bad if I lock the loan and it falls through for whatever reason. So if they can't close on the loan, if the seller backs out for some reason or another, or there's a problem with the house, it looks bad on my rate. It's called pull through. Um, but it's nothing that you guys need to worry about. But yeah, all that matters is when you lock the rate, you're locking it generally for a 30-day period of time. Um, that's why we wait until we're in contract to lock the rate so we have that property. Otherwise, that lock is specific to that borrower and that property. So let's say that lock expires, you are generally going to be, if you don't extend that lock and you have to pay interest on that, and that's different for each lender, but we can go over that in a second. Um, if you don't extend the lock, then you guys are going to be subject to whatever the rates are at that time or your current rate, whichever is worse, plus a penalty on the rate. So if you guys are going to close a loan, we need to extend the lock to make sure that we protect that lock, and that's why we wait until you're actually in contract to lock a loan.
Thank you.
Right. So we covered a lot of ground there. Let me throw this back in a like just to make sure that I got everything clear. So that 0.749 you're talking about loan, that number comes from the loan company, the lender, right? And that is based on what's happening with the stock market, right? Because they're essentially like they're borrowing money at the Fed rates. So
Right.
if the Fed rates are crazy, then that number is going to be crazy because they pull
Yep.
it straight from there. It's not like the lender's just reaching in their own piggy bank for this, right?
Right.
Got it. And then you said that there are certain overlays, right? Like if a person has an attached home or a condo versus a detached home, then that's going to change that number too, because that changes the risk profile, right?
Correct.
And then
Yeah.
also the person's credit score. Do their assets matter or just credit score?
Um, Depending on the loan type, your assets can matter, but generally speaking, for a VA loan, it does not matter. It's just your
Let's just
credit
say
score.
80% of it's just going to be credit score.
Yeah.
Got it.
Yeah, most of it is credit score. Loan to value is another one. So if you have a higher loan to value, i.e. VA loans are going to be 100% loan to value most of the time. Um, that would be an LLPA, whereas conventional, as you're putting down 20%, or if you do, I mean, some people do more than that, 30, 40, 50%, whatever it is that they feel they need to or choose to,
Yeah.
that can help with rate as well.
Got it. And for our purposes, to kind of follow up with Alan said, we need to be like as realtors, we need to be sharp on this. We need to have a good, thorough understanding of it. But we by no means need to jump in and start trying to explain all
Right.
this to
Yeah, I
clients.
would not.
No, like we
No.
should understand it for ourselves and know what we're getting
Yep.
into, but leave that in the lender's hands to walk them through. So
Yeah.
for one, we want to make sure that we don't put ourselves in a position. The second you tell somebody you know something, they're going to go to you for every fucking question.
Yep.
And then also, we could say something stupid or get ourselves into a position where we got something wrong. And, now we're kind of looking like idiots and we got to backtrack something that's not true. So we definitely want to avoid that.
Yeah.
Yeah.
I would agree. I'm happy to take on those calls
Yeah.
or texts or whatever you guys have to explain it to the clients. And generally, I'll send this out as you see, Matt. You'll get copied on it as a realtor. And of course, we send it directly to the client so they have it. And I
Yeah.
say, hey, call me if you have questions. Don't call Matt. Don't call Courtney. Don't call Tawana. Like,
Yeah.
call me if you have questions because
Yes.
this is what I do every day. I'm the numbers guy.
Yeah.
Um, so yes, and Matt, real quick back into the other third party fees. So like you said, the title and escrow will do that where they're packing some stuff in, specifically where it says services you cannot shop for. So your appraisal fee, your credit report, your flood cert, all those fees, those all have specific invoices that get paid out. So those, I mean, there's no fluff in those.
Yeah.
Not only on the lender side, but also on those people receiving those fees side.
I
So
thought
that
the
has to get
appraisals
paid
were up
directly
to
to them.
800 now. Are they at 7?
It depends. So a VA loan, I pull a VA. VA changes it by area and also by property type. And then unconventional, that is done by each individual companies, right? So it's, I mean, sometimes a conventional, I've even seen down $500. Um, Let me pull up the VA's website. They have it on there. Appraisal cost. I'll pull it up if you wanted to continue on
Yeah.
any
So
other pieces
I
there.
think something that's important for people to, the realtors on this call to understand is the appraisal fee is it's a out of pocket fee for the borrower, for our buyer, but they don't generally pay that out of pocket. Usually that'll get covered by the lender, wrapped into the closing costs. So then at the closing table, when everything gets paid out, the lender will just recoup that. So it does matter, and they need to know how much it costs. That way, they don't get sticker shock. And they're like, "Well, I paid $700 for that. Why?" We've had a lot of people get this. They see it 3 times during escrow, but then finally, when they get ready to sign all their loan docs with a notary, when it's like too late to turn back, suddenly they want to like check every single line item and be like, "What's this $3.50?" Like, buddy, you're about to pay $1 million. You're worried about like the cost of a Gatorade? Like, calm down, you know. But it happens. Like the $8 flood cert be asking me like, "Can you pay that? Why do I have to pay that?" I'm like, "Oh,
Yeah,
seriously?" Like, okay,
yours. You pay it.
yeah,
Yeah, for California, so there are different kinds of appraisals. So you have your single family, condominium. Those are generally same price. So right now in California that are not in high demand counties, which San Diego is not. And this is specifying saying not that the property isn't, that they have enough appraisers in the area for it to not to be high demand. So it's $700 for single family condos, normal properties like that. Manufactured homes are 750, and a 2 to 4 unit is 900.
yeah.
Appraisal timeliness is 7 days, which is awesome. Business days, just we're on the same page. So
Oh, it used
generally,
to be 2 weeks.
it used to be 2 weeks, yeah. So they've updated that.
Hell yeah,
Um,
it's great news.
that is good news. But again, remember business days. Day one doesn't count.
Yeah.
So just so we're all on the same page, and that's
Like
from
so
when
every
it's
five
delivered.
days add 2 days of add 2 days of fluff. So if it's 7 business days, then you know that's 7 days plus 2 days of fluff. So roughly 9 days.
Yeah. Yeah, it doesn't have to take 9 days. I mean, I've literally ordered one on Friday and had it back by Monday because the appraiser was like, I just want to get this done and on to the next one. I think they have a limited amount of VA appraisals they can have, like
Oh, that's
assigned
good.
to them at a time. So some guys that are just out here wanting to like, I gotta go make money. I mean, a lot of them are independent contractors or they run most of the business themselves. So that some guys are wanting to get at it, and I've had other ones even push past the timeline. And technically, you can report them to the VA and say, "Hey, what the heck?" But
Yeah.
it's not worth your time.
I remember the days of trying to track somebody down for a month to get a VA appraisal completed in
Yeah,
COVID when shit was wild. That was not a lot of fun. You got freaking listing agents up your keister, but I'm like, dude, I don't control this appraiser. What do you want me to do?
yeah. Oh, I'll stress that too. I don't either. Just so we're on the same page. And like, they're not my buddy. They're not my pal. I'm
You
really
don't even
not
know
supposed to
them.
talk to them at all. Um, it's so we can go over appraisal stuff too if you guys want to talk
Yeah.
about
Well, with the
ROP and all
appraisal,
that.
like
But
we have zero control over who we
yeah,
even hire for the appraisal because we have to go and essentially pull a ticket at the
Yep.
VA, and they
Yep.
just randomly, whoever's next in the rotation, you get them, and you don't have a
That's literally
say.
how it works.
Yeah, and it's like you don't even know who all's on the list. You can't even see the list of names of appraisers. They're just you get assigned, and there you go.
Yep. Yep. You get assigned, well, yeah, you say, hey, I need an appraisal, then they divvy it out to whoever they've got available at that time. Um, and then half the time that appraiser doesn't update us on anything. We give them the contact information of the seller because that's the person they need to, or seller's agent, this person they need to contact to schedule it. So they don't tell us half the time when to expect it, um, or really any information at all. Where usually the seller will talk to you guys and say, hey, look, the appraiser reached out. It's scheduled for this time. So I don't have that information. They don't give it to us 95% of the time. Um, and then when it does come in, that's as soon as it comes in on my end, we give it out to you guys because we need to go and figure out what's our next step. Do we need to start, negotiating? Do we got to start worrying about ROV and if we're didn't appraise for the value we needed,
Yeah.
and going on those steps.
Yeah, and those are important things to keep in mind too with your clients because when we put these offers together, there's a certain amount of like reliability that they're going to be able to close. That determines whether we even get the offer, right? If a listing agent looks at our offer and they're like, "You're asking for maximum credits," meaning like say we got a $600,000 house that these people are trying to buy, but they can only afford it if the seller gives them back a full 4%, like $24,000. So basically, we're writing a loan at 624, asking for a $24,000 rebate from the sellers. That's kind of how we wrap in the whole closing costs and all those fees that a person would generally have to pay out of pocket. We're wrapping all that stuff in, and all of that hinges on the appraisal. Well, if the listing agent looks at that and they're like, "Hey, man, if this thing doesn't appraise at value, can you move forward and pull some money out of thin air to close this thing?" If they can't do it, then they're not likely going to take the offer. It's one thing that we just had with the last offer we put together with these guys.
Yep.
And then, the second thing that a listing agent is going to ask is like, well, what guarantees can you make that you can fight that low appraisal and get it up? And one is we get Tidewater, which is basically just a notice. The appraiser sends out a warning shot, says, hey, I'm about to write a low appraisal on this. You got like 24 or 48 hours to respond?
It's 48 hours.
48 hours. You got 48 hours, and there's a form you got to fill out. Or is that just for ROV? Is a form for Tidewater or just ROV?
We recommend doing it for both.
Okay.
Because what's going to end up happening, if I'm honest with you guys, I've never had it to where the appraiser came back after we did that and they were like, yeah, you guys are right. Here's your full value. Um, it just, I've never had that happen. Um,
They give
but
us
if
something, though,
they,
generally.
they will generally give you something right there, right? Or they will or they won't. And
Yeah.
it matters and it doesn't matter because if they don't do it, that's fine. We're just going to go to we'll call it their supervisor, but it's the
Yeah.
VA at this point. And these are also appraisers, but they work directly at and for the VA.
Yeah.
And then they do want it formatted in the appraisal status. So
Got it.
from there, we'll send it over to them. So it just kind of saves you some work down the road if you're going to
Yeah.
use the similar comps. Um, I generally recommend getting some different ones. Make sure they're in the same, if it's in a community, get the community ones that support it. You can go outside and try and make the argument just to try and make the argument. And like Matt was saying, most of the time they'll either at a very minimum come up or they'll give you your valuation. I've only had one ever that they didn't move at all.
At
And
all.
I've done,
And we probably knew that one wasn't going to happen anyway.
yeah, yeah.
Yeah.
I think we've
So,
done probably 15 or 20 of these over the period of
yeah,
time that
we've
I've been doing them.
freaking done so many of them.
Yeah.
Then the thing with that is when you get a Tidewater, they're basically saying, look, I've looked at, 3 to 5 properties that are similar to this one, and I can't justify the purchase price that you're offering for this house. Like as a bank, I can't tell the bank that this house is going to be worth that if the bank has to foreclose and sell this thing. So they're really, the appraiser's working as a protective element for the bank or for the lender and for the VA, because the VA is like essentially partnering in this because they're the ones that are sort of co-signing on the whole thing. So what we have to do with the Tidewater is we got to go out and find other homes that have sold and try to make a new case that because these other houses sold at a higher price point, that they should be included in this calculation too. Now, generally, the appraiser is going to pick the closest and best match properties for this one. They're going to find the ones that are most like the size, most, closest to the home, most like for style and everything. But if they do that and the numbers don't look good, we have to go get creative and find other properties that might be a little further away, that might not be like for like, and then try to make a case that those should be included in, the quantifications too, so that it'll encourage them to push that number up. Or try to find other properties that sold that weren't on the MLS or didn't show up correctly on the MLS that they might have missed. That happens sometimes because sometimes, for instance, somebody will put a property, they'll might be an out of town agent and they put up a property and list it on their local MLS, like say they're out of LA or, Sacramento or something, and they have like a regional MLS they use. You might see that house sold on Zillow, but then you go to your local MLS, like here we're using the San Diego MLS, and you can't even find that listing on there for some reason. Well, something like that would be a prime example because then you can dig that up and say, hey, wait a second, check this out. So when you get that Tidewater, you got to be creative and try to bring new data. You can't change their mind about how they value the properties that they did use for comps, but you can try to bring new data, new properties to the list. Or if you happen to know something about the properties that they valued, like say they did a comp, right? And there was a house 3 doors down to yours that didn't have a lot of pictures, and they used that as a comp. But then you go in and you're like, wait a second, something you don't know about this property was it was dank like a cellar and it smelled like a foot. And you could find other pictures or some more information or get something from the listing agent to say, hey, the condition on this house was really poor that you couldn't tell from the MLS. And then the appraiser can use that as data to say, all right, well, I can now lower the condition of this home on record, which means your house is superior to that one, which boosts your value up a little bit. You got to do the homework, and that's what they need in order to do that. And you only get a Tidewater with VA. You don't get an advance notice with conventional loans.
Yeah, I think you hit the nail on the head there, Matt. That was awesome.
Yeah. We've been through this enough. And then if the Tidewater doesn't work, so you go through, you do the work, you send them all the data, and they're like, sorry, still can't do it. And then what they'll do is they'll issue the NOV, right? That's the notice of value. As far as we're concerned, that notice of value just means the full appraisal. It's got all the information on it. It's the whole thing with the bottom line number that the appraiser thinks that it's worth listed on, page 1 or 3 or whatever it is. All right. Then when we get that, we have to say, hey, I disagree with this notice of value. I think this house is not valued correctly. And then that's when we take it to the VA, I guess elevate it to the supervisor, and we do the reconsideration of value, ROV. That's what it's called, right?
That's correct.
Yeah.
Yeah, and so we take that and we also try and write up a sob story, we'll call it, of why the veteran needs this house in particular too. So we kind of include all that in there. ChatGPT helps make that real easy now.
Yeah.
Back in the day, Matt and I had to get together and get our thinking noggins on and make that happen. But yeah, then we take it up to them and we say, hey, look, this is why this vet should get this house. Can you help us out? And if you're within 5%, it's usually a pretty shoe in. If you're within like that 10%, then you might get a part of it. Anything above that, it starts to get a little more
Yeah.
difficult. You got to get their supervisors, and it gets fun. But
Five
I had
percent's a
one that was,
lot on a $600,000 house. That's a
yeah,
$30,000 swing.
yeah,
Hell, that's the closing costs we're usually trying to get covered
yeah,
anyway. So,
right.
if we can
Yep,
usually get a 5% swing, then that's all the difference for our guys.
yep. I had one in Virginia, I think it was, that they came in at 540 and the appraisal came back at like 430, 430 or 440 or something. It was about 100 grand less, and we ended up getting like 60 grand back from the VA. So um yeah, I think the most important thing to be able to offer is, at least for the ROV, which is going to the supervisors, is a good story for them to know and understand of how they're helping veterans. Because the VA, believe it or not, does want to help veterans.
Yeah.
At least this section of them, they do. Um, to get the appraiser to change their mind, like you said, Matt, the biggest factors for those is going to be facts. They don't care about your opinion. They think your opinion's wrong because they're
As they
like,
should.
well, serious, because
We have a
they're
vested
licensed.
interest in it. They shouldn't
You do,
trust us.
and they're licensed based on all of the stuff that they're licensed on, and
Yeah.
they know what they're doing for that, right? So
Yeah.
you could say, yeah, but this property, if you give them fact, like you were saying, and hey, that you couldn't see this property, it was bad. Here's why. Hey, you didn't see this property because it was listed on this MLS. Here, this is. Those are the really good factors for getting the appraiser themselves to move without having to go up to an ROV.
Yeah. It's if you think about it, a real estate agent, if we get an appraisal wrong, we're not going to lose our license. If anything, we're going to give ourselves
Right.
a medal because because we did our job. But if it's
Right.
wrong, like whatever, like we move on with life. But if an underwriter uh does something wrong, their license is at risk, and that's their whole livelihood. So no, they're not going to kick that ball into the fairway just for us. But if we give them ammunition, something that's concrete that they can put into their report, then they can defer that liability and say, look, he gave me data. I just put the data in and it protects them, you
I
know.
have a question.
So T,
So why, okay, so as an agent and when we get a listing, we can talk to our seller to get them to do inspection before, going into an offer and having, we have a pre-inspection before putting the house on the market.
yeah,
Why don't sellers have appraisal done before they sell their house? Can they?
they sure can, but it's useless.
It's useless.
Yeah.
Why? Because every time they get into a deal, they have to do appraisal.
Yep. And I'll touch on this a little bit and then I'll let Dom finish it off. But you got to consider the appraisal is done by an appraiser, and the job of the appraiser is to protect the bank. Well, if you hire an appraiser and they don't have a bank to work for, then like kind of defeats the purpose because you're just going to get into escrow and another appraiser is going to come along who works for a different bank and you could get a completely different story and that'll be a waste of $700. So,
Okay, that makes
yeah,
sense. Yeah, okay.
what a person should get is a good quality CMA from their real estate agent. And we talked about this before. Real estate agents suck at CMAs because they don't do CMAs like appraisers do appraisals. They're just like, oh, Zillow says 525. So yeah, let's do that. So stupid,
Yeah.
right? But if you do a thorough CMA, then you know generally what the appraiser is going to see and you can advise them accordingly. So if a person is going to hire a horrible listing agent, yeah, maybe they should get an appraisal because then they can't trust their listing agent. But aside from that, that's our job to do that really well.
Yeah, I think another
Okay.
big reason to not do the appraisal first is it also sets in stone basically what your maximum you're going to get for it, right? So the reality is they also get the purchase price when they see it, and they do try and work to get you to that amount if they can, from what I've experienced.
Yeah.
So you know, if you listed at 500, but you guys are trying to, getting offers in at 600,000, and then you go and give it to this appraisal of 500, well, someone's going to come up with that gap of 100. Um, just something to keep in mind as you're talking about doing appraisals ahead of time. That's probably the biggest piece as to why I
Yeah.
would not do an appraisal ahead of time.
Yeah, that could become a disclosure that is a penalty to you because You have to tell them you got an appraisal for 500,000, and the buyer might be like, "Whoa, wait a second! I
Yeah,
recant my $600,000 offer. I don't think I
right.
want to pay that much." Yeah,
Yeah.
it's like it's all
Okay, that
downside
makes perfect sense. Yeah.
and no upside. Yeah, and I wanted to say what you said, Dom. It feels to me like appraisers generally work to try to justify
Yeah.
the purchase price. And I can't say that they do that. It's just in my experience it really feels that way because why is it that 95% of the time the appraiser comes up with the appraisal matches the accepted offer
Exactly.
price? Like
Yeah.
come on.
Yeah.
Like you can't tell me that the market is that efficient that it's
Right.
that
No,
it's
I
coming up
agree.
that way every time.
And I think you'll see some things too, and like sometimes they will just land right on it. And if we get over asking, I think the reality is it could have even gone for more, but they're gonna remain somewhat conservative because they also know that by giving you a higher than asking appraisal, I mean, it gives a buyer that ability to be like, okay, actually, we're gonna go from, 500 to 505, which is the new appraised value, and take a seller credit. So.
Yeah.
Um, I think they stay pretty reserved in that,
Mhm.
but you might see it where like they give you an idea like, hey, it could have gone a little bit higher because instead of 500, they do 501, 502. I've definitely seen that because again, like you said, like I agree. I don't think it's the market's that efficient.
Yeah.
Also, to end on like a uh, you know, 000 number, I think Matt, when we bought the house in Oceanside, I think we bought it for 901 200 or something like that. And that's
Yeah.
exactly what the appraisal came out to be. And I was like, what?
How is that possible?
Right. So to
Mhm.
land at such round numbers like that, I think it's just unrealistic. But again, their job is to say, okay, first off, the big thing is, does this property meet the minimum property requirements? The VA lays them out there in Chapter 12. Here's what it has to meet. Generally speaking, it's got to be habitable, right? That's a lot of what the appraisal does. It's not what an inspector does, where they go and knock on everything, but it's generally speaking, is everything seemed of sound order.
Yeah.
Um, is it up to code for? Does it have railings? Do your outlet covers have outlet covers on them, or things like that?
Chipped and
And
peeling paint,
then,
missing tiles, roof tiles, and
right,
heating equipment, and just
yep,
normal stuff they can see. They're not tearing out drywall to make sure the studs are 16 inches on center.
right. They're
Now,
not bringing stud detectors with them. Yeah, it's just, is this property okay for a veteran to go live in? Yes, great. Checks that box, and then okay, say they get the whole purchase contract, so they see what the purchase price is. They see that you're getting seller credits, and they do. I think they really do try and get you to that point. Um, but again, like you said, sometimes there's just not stuff that supports it, and they need that help. And or the VA again, VA is willing to go above and beyond to a point as well, but they also have to mitigate their risk too. So,
you might not know the answer to this, but in a market where everybody's taking seller credits, if an appraiser gets his hands on a house, a sale that we've got, and we're asking for a ton of credits, and he looks over and he sees that there are three other houses that he's comping, and all those have seller credits included, can he use that as part of that valuation process to say, well, even though I think the house on its merits might not be worth that much, these other people also took credits to reach their numbers. Therefore, I think this is fair.
yeah, I mean, you can definitely use it as a consideration if it's a market norm. That's where that comes
Market
into
norm.
play.
I remember that phrase, market norm, because they do. I know that they have line items in there for ascending and descending markets.
Yep,
Yeah. So if the market's falling, they're going to say, "Hey, I'm not going to give you the same valuation as a house that sold 2 months ago. I've got to give you a declining market hit."
yep,
But an improving market, they can also do the same thing and say, "Look, generally everything's going up like crazy right now, so I can pad or afford to, be more generous and give you a higher number just on an inclining market."
right. That is correct. I will go through my emails here as we continue and see if I can find. There was a time that I had asked the VA about that as well, and I just I can't remember exactly what they came back to me with. I'll see if I can find it
Yeah.
in this call. If not, I'll shoot it over after.
And the reason that I think that matters for us is because you know, we all know what we're doing. We know that we're padding that higher offer with getting credits. So we're really asking the VA to work with us on getting those credits rolled in. Like, yeah, we know the house is only worth like, you know, factually 600, but the affordability for homes across the market right now is bad. So, you know, is there a justification? Is there an argument that we can make to get them to say, all right, well, we'll give you a pass on the 24,000 that we're asking for above the concrete value of 600 for financing purposes? Like, is that something that's a little bit more, you know, debatable with them? Or is there a category or a box that the appraiser can put that in to say, yeah, we can be flexible on this price because of the financing condition, not just the house, but the ability to buy it. Like, is there something on the appraisal that we can, you know, get some wiggle room on?
Yeah, if do you have an old appraisal that you have with you on your end?
I probably got some, but I'll, all my emails from my previous
Yeah,
transactions and
there
stuff
is a
are
box. It's
buried.
like this. I think it's a second or third box down actually for um, credits to be taken into consideration on there, and then
Ah,
you can see whether or not they give you valuation on it.
yeah. So that's something on, you know, like you said, it's hard to get the appraiser to change their mind, but you know, if they're not somebody who's done a lot with credits, like say they come from a market area that is just like all cash, you know, not all cash transactions, but like all like, you know, conventional transactions and stuff with heavy down payments and things. And they're not used to a financing component. Like we get some VA appraisers that are from like non-military towns a little further north, like out of LA or whatever. And then, you know, they end up getting an appraisal down here in San Diego, and we're like, you don't really do a lot down here, do you? Because they're giving us these wacky valuations. Like, oh, dude, you're way off. You know, you can see
Yeah,
that they're using comps from houses that are across the freeway in a whole different neighborhood, like North Park to City Heights. Like, dude, that's like, yeah, that's, you know, that's apples and oranges, guy.
yep, yeah. That's the biggest thing is just being able to fight it with actual facts. They don't care about our opinions.
Yeah. Now, let's just say, like, kind of following up, you know, we'll round out the appraisal talk here, but if we do get an appraisal on a property and then like it's finalized and that's it and that's all we got and like you know the borrower can't move forward with it and it has to go back out to market, is the next VA person that comes along and tries to buy that house going to be stuck with that appraisal, or will they be able to pull the handle, you know, and get another turn, a different appraiser and maybe a different opinion on it when they go to buy it that same house
Yeah,
like a month later?
they are indeed stuck with that appraisal for 6 months at least.
Got it. And that's
That
only for
sticks with the property
VA that
itself.
sticks with the property, right?
Uh, yes,
What about
yes,
F?
but
I understood that it was different between FHA and VA because I thought, and I could be wrong. You're obviously more into the system than I am, but my understanding was FHA was stuck with a property, and for anybody that was using VA FHA, but VA was person and property for 6 months, not just VA and property. But is it basically the same as FHA? Stuck to the property for VA loans?
yes, it is stuck to the property for VA loans.
Okay. It would
For
make sense
FHA,
that those would be the same.
yeah, yeah, they're very similar. It's the government stuff, right? So
Yeah.
those stay the same.
That's good to know. It's 6 months, right? Well, 6 months, hell, the market's different anyway. So that appraisal, at that point, the appraisal's expired anyhow.
Right.
Oh man, that would
Yep.
be terrible if you were in like an inclining market and somebody got a VA appraisal and 3 months later it's a whole different market and you're stuck with that old appraisal. Ouch.
Yeah.
Yeah, I'd be fighting that one tooth and nail. Okay, circling back, I want to talk real quick about the loan, the rate lock. So, what you're saying is a person has to have a property and we got to be pretty certain that we've got an agreed upon like a signed purchase agreement. Like we basically got an escrow before we'll lock the rate. But that's
Yep.
not every lender all the time, right? That's just something that is lender to lender.
Yeah, that's correct. I mean, most lenders won't do it otherwise. But yeah, I mean, you can lock it. Let me, where do we go here? Let's start with there is an option where if you wanted to do something called lock and shop, you can do that.
Hmm.
Generally, so you'll lock for a period of time. Um, I can give you general information about it because I've never done it. I just know it exists, but I
Yeah.
don't normally recommend it to people.
Is that a
But you would,
Barrett thing or is that other lenders?
it's a buy lender thing. So it is something that we could offer on our end.
Yeah.
Um,
I seem
it
to remember that
is,
was a thing that was pretty popular like last year, I think, because they were really trying to just get people to sign
get
up
in
for a
and
loan.
start locking. Yeah.
Yeah.
Well, because what happens is you pay a premium up front to be able to lock that rate for a period of time.
And
And it's
that's the buyer
also
pays that out of pocket.
yes.
And but basically they write the check to the lender and say, hey, for this rate, here's the check.
Yep, exactly. And so I mean you can do that. It also
Not
will
advised.
generally include a higher rate because again, they're trying to hedge, right?
Right.
The bank's in it to make money. So um, all you're really doing is just extending the period of time that you're going to lock the loan for.
Yeah.
Um, so yes, is that an option? Sure. Another option is, you guys love this place, for sure it's going to happen. Can I just go in and lock it? Yeah, I can do that. I don't technically need the purchase contract. I do need the information about the deal.
Yeah.
But if we're just waiting on Bobby Joe to sign, he's just taking forever, but he's for sure signing, whatever. I can go in and get it locked and have that conversation with the client. Um, that's not a problem as if we have a place picked out. But separately, is there a lock and shop option? Yes, I just don't recommend it for most clients. It doesn't make sense, in my opinion, and especially if we're seeing like rates are likely or potentially going to be coming down at some point. Um, then I would definitely not do that.
Got it. Now, what I've always understood with rates is you're essentially locking in uh, a a ceiling, right? So if you lock it in and rates continue to drive upward, you're protected. But if
Right.
rates continue to drive lower after you lock it, there's a certain amount of flexibility there, right?
Yeah, and that's a buy lender. And actually, because I know we keep using a lot of terms, so I want to specify I am a broker who works for a brokerage, and we have lenders that we write loans through.
And
So
we
it's
can
a
use lender as like interchangeable with bank just to make it easy for people to,
correct.
you know,
Yeah.
conceptualize.
And I just want to bring that up. So yes, by lender. Oh goodness, Matt, I had an ADHD moment and lost it all by doing that. Can you
Yeah.
ask that question again?
So the ability, like when you lock the rate, it caps the ceiling but allows it to
Yes.
float down. And
Yeah.
like, is that a industry wide or is that a lender to
Yeah. So
lender?
it's by lender, and each lender will have different rules as to how far it has to come down for you to be able to float the rate down. Um, and then there's also typically a extra, I don't want to call it a penalty, but it's an extra amount that you have to pay to get it down. Not you
Yeah.
specifically, but it
Yeah.
basically means you have to move about a point for you to come down half a point.
Mm,
That's usually around the averages to where things need to move. So it has to move pretty exponentially. It doesn't happen very often that you see that large of a movement.
yeah.
But it does happen. I've done it maybe two or three times.
Yeah.
Um, in
Going
the
back to
last,
those big swings in the market you were talking
yes.
about, like when those
Yeah,
announcements come out and then suddenly the stock market like reacts
right.
wildly.
Yeah. So not a very often thing, but it does exist. And it does lock you in as long as you close the loan within that 30-day period.
Yeah. And the reason I guess that matters to me is we get consumers that are like, well, I think the stock market's going to get better or whatever, right? They're like, I don't want to make anything permanent. And they're those type of
Yeah.
people that want to constantly gamble, even
Yeah.
though we're like, just lock it, dude. If you like it,
Yeah.
lock it. You know?
Yeah. And that's it. If you like your rate, lock your rate.
Yeah.
Just like with picking stocks, I mean, almost no one's ever right. If you are, you just got lucky. And that's cool. But if you like your rate, lock it in. Um, don't want to wait too long to lock it, but technically you could wait up to about a week before
Yeah.
closing to lock the rate. Otherwise, you're doing what's called floating.
Yeah.
And then there's certain days that are generally better to lock or not lock, assuming there's no large information that's coming out, right? So
Yeah.
generally
Mondays
you
and
don't,
Fridays are like big pivotal times, right?
yeah. Yeah. So Fridays you don't usually want to lock. You can do it if it's early enough in the day because they'll give you a rate for like that day. A lot of the times, our big lenders who we usually use would be like UWM. They'll
Mhm.
do multiple rate changes a day. Um, in the mornings, it's okay, but in the afternoons, they're starting to price in for basically the whole weekend and the
Mm.
risk of what could happen over the weekend. So, um, throughout the week, Mondays are decent days to lock, and otherwise, again, just if you're happy with the rate, lock it in. That's the
Yeah.
biggest thing, honestly.
And that brings up another thought for me too, which is when people are talking lender to lender, you know, what we're saying right now is the industry, the whole industry, not just UWM, but all the lenders out there are going to change their interest rates not only day by day, but breakfast,
Throughout,
lunch, and dinner.
yep,
It's going to be different. So if
yep,
a person's talking to you on Monday morning and you're like, hey, this is the rate that I can offer, and then they talk to Joe Schmo Tuesday afternoon, like, oh, they're giving me a better rate. Well, it's a whole different environment at that point,
yep,
right?
yep,
Um,
yeah, and yeah, exactly.
so it's important to shop. Basically, if you're going to shop, you got to shop at the exact same time with the exact same information. And it sounds like you even need to shop with a specific home in mind because, correct me if I'm wrong, but certain lenders can, because the attached versus detached is going to be different,
Yeah,
then maybe one lender is a lot better, has better rates for attached but not detached, and vice versa, right? That could
yep,
happen.
yep, could absolutely happen. And I would also say so VA is pretty cool because they don't, as of recent, they're not charging you an LOPA on condos, attached, detached. So that's a solid on VAs, but and it's a big mistake. It happens every once in a while where people will give you a price on something or a rate on something, um, and not include the fact that it is a condo, right? So definitely something to take into consideration for that.
And when we say
But if
LOPA, we can basically internalize that as that's an extra cost. That's going to be like
yeah,
a detriment to my rate. Like
yes,
it's like a burden to the rate that I'm going to get for being a
right,
condo. All right.
yep. But if you have a general idea, right? So we get our people like, I want a condo. Great, I can go get you a rate on a condo. Or I want a single family house, and it's for sure gonna be great. I can do that. And that's why when the question is, cool, what are rates today? It's like seven
Need more
percent. Like
details, buddy.
you just tell people, right? I mean,
Right.
because same thing. I mean, there's all of these different pieces. Is it attached? Is it detached? What's your credit score? How much money are you putting down? Are you buying the rate down? Is there a fee? Like, so when someone says, "Oh, I have 4% rates," cool, but what about all these other things, right?
Yeah.
So,
Or what?
um, it's just a lot of the times when you see that our marketing, hey, it's this much, cool. What's going on with that?
Yeah.
Um, so definitely keep that in consideration when you see those out there.
Let me ask this. So people ask us like how are rates doing today, and they're kind of expecting us to give them like an aggregate answer, like relative to yesterday, relative to last week. The
Yeah,
only thing I know to do is go to like Mortgage News Daily and the flip to the page that talks about the market rates, and then go to the VA subsection. But it eliminates all that nuance that we talked about. Do you know how they come up with that number or what type of loan they're even talking about when they publish those numbers?
for that specifically, no. As far as my end, what I generally tell people to do is go to Google and type in mortgage rates today.
Hmm.
Um, And they just kind of come up with it. Oh, where'd it go? I guess they changed it up now. Come on, Google.
Oh, it's not
Making me
working
seem
anymore.
like a no, it's not doing it anymore. Um,
Second search feature, mortgage rates today. Funny.
yeah, what the heck? It used to have it on there, but that one was pretty solid. And basically, what you do is you just put in some general information about it. So, type of loan type, it'll ask you your credit score, and I think it was like loan amount. And it just makes a general assumption about stuff and things that,
And that was from Google, not from like some sponsored because I'm
yeah,
getting
no, it
stuff
was
from B of
specified.
A.
It was just specifically mortgage. It was like, you see like their AI at the top. It was like that,
Yeah.
but I
Let's
don't see it
ask Chat
anymore.
GPT.
Let's do it. Mortgage rates today.
While y'all
Fluctuating
were
around
doing
the
that,
7%. Yeah.
did something happen to the Barrett financial calculator? Because like it's saying it doesn't exist anymore, or the app doesn't exist anymore.
That's a great question. They haven't told me about that. I
Because I
can send
tried to use the
you.
calculator the other day and it says, hold on, I still have the app on my phone. I'm gonna click on it and tell you what it says. And then I was like, well, maybe I just need to update it, but it's saying like it no longer exists. Um,
See what Matt's got going on here.
have you checked yours, Matt?
Yeah, I got it up right here.
No, not on the computer, on your phone.
Like the app. Well, first thing I wanted to do was just make sure that they have the software in place.
Yeah,
But
I know. I went and checked the computer too, and it was fine on the computer. I was just looking at the app. I think I deleted it because I was like, well, there's no point in having
yeah.
it.
I used to use the APM one. I liked it a lot, but APM's just
Yeah,
that company changed a lot.
it did.
Yeah, I deleted the app the other day, so you'd have to check it, Matt, and see if it says the same thing for you. But yeah, the website works, but it was just a quick access tool to go
I
to
think
the.
what we actually did a while back, Dom, was I just made I remember this because this happened. I found the website, and then on my phone, I created a shortcut tile on my iPhone, and I actually still have that. So you can go to the web page on your phone, and then you can long press it or hit the three buttons or something like that, and it will give you the option to make a shortcut on your iPhone. And that's what I did. Let's see if I can find it.
Yeah, even when I search the App Store, there's nothing that comes up when you type in Barrett Financial. So, not sure what happened.
Yeah, do what Matt did. I just tried
Okay.
it. It works.
I
Yeah.
mean, well, if there was an app, that would have been a lot easier than going through.
I agree. To be honest with you, I didn't. I didn't even know that there was an app. I don't
Oh,
ever use it on my end, to be honest. Um, whenever I'm doing stuff, I do it directly in our system. So
oh yeah,
uh,
okay. All right, I'll just
yeah,
make a link.
yeah, the link works.
Roundabout way.
Yeah. I mean, the mobile format for this website is just as good as an app. Like,
Yeah,
I mean, it's real
I'd agree
good.
with that.
That's probably why they got rid of the app. Is like, well, why would we have this
Right.
app that we have to maintain when when the web browser version of it's so good?
Yeah.
Yeah. It looks exactly like it looks on my computer screen, just on the phone. Um, let's see. Mortgage calculator. I wonder if they have a specific VA. What's up, Al?
Oh, I was gonna say, can you give us an example? But I think you're doing it already. Sorry.
Yeah. So, but that's what's really good. If you go to a lot of these different websites, they might not have a VA function on there, but it does right here. And you got to keep in mind with VA, it's a zero down loan. You have the ability to put money down. There's no one says you can't, but it's not required. It's 100% loan to value. But it also incorporates a funding fee, and you need to account for that to a certain degree. Let's see if this actually brings it in. Insurance. Yeah, right here it says first VA mortgage, yes or no. And active duty, yes or no. So let's just say not my first, not active duty. I'm curious what it's going to say. And then see details.
Then not your first, not active duty. Should be 3 unless you have disability.
Let's go. I love this view. That's beautiful, but I need a breakdown and not a mental breakdown. That's giving me the amortization. I wish it would actually like specify like the
Just add
APM
it
one
in
used
there.
to.
Yeah.
Yeah. So VA.
See if I can find. I had an old or I have a different calculator that I use for it for figuring out how much entitlement is left. Let me see if they also do it here.
It's got principal and interest.
Here, do this one instead, Matt.
Yeah.
What's my payment.com forward
What's
slash VA. This is probably my favorite calculator that exists.
oh sweet. I'm gonna go ahead and bookmark this under.
I would do the same, Courtney, with this one instead of the other one.
Okay, cool.
I love this one.
All right. What's my
Yeah.
payment?
Yeah, what's my
Yep.
payment.com / forward slash VA.
There's
I
your
went
funding
ahead
fee
and
right
added
there.
a bookmark it.
Change your down payment to 0, and then it'll
Oh,
automatically update that funding fee percentage. Um,
that's
and then
beautiful.
yeah, it's real good.
I love that.
Right now it says 125. So if you put down a percentage, so if you put down 5%, it goes from 2.15 to 1. What is it? 1.65, I think it is. You can see it by hitting those different buttons there.
Oh, let's see, purchase price. Oh, this is showing a 10% down. That's why. Here we
Yeah.
go.
Yeah. So sorry, 5% is 1.5, 10% is 1.25.
Yeah. And that's not something we, as real estate agents, we really need to go into detail with people. Just they need to know the more money we put down, it does help with the funding fee. But the
Right.
biggest swing is, are you active duty or are you a disabled vet? Because it goes
Yeah.
from basically most people are going to fall into the category of it's either 2.15 or had a previous loan. And it goes up to 3.3 for their subsequent loan, second, third, fourth, fifth for infinity, or receive VA disability, boom, goes to 0. This is real. This is a really good tool for when we sit down and have those conversations with people about the funding fee. This is excellent.
Yeah.
Definitely
This one,
refer
let
back
me
to
double
this in
check.
the future.
This is one that I would use for figuring out total uh, entitlement too.
Yeah.
So if you click on the left hand, those 3 bars, it'll pull that out, and then you can put in information and figure out entitlement. Not anything that you necessarily, especially the newer guys, need to get this far into depth
Oh,
just
these
yet.
3 bars up here.
Yeah, on the left there, and then VA entitlement calculator.
Oh, heck yeah, that's really good. I like it. Who's this? Who owns this website? Do you know?
I don't know, no,
Oh,
but
cool.
it's great.
Yeah, it's like it's not.
WMP's not a mortgage lender, whoever it is. Just someone being awesome, making a great website.
Oh yeah, this is pretty cool because it allows you to put in even like your disability. You can adjust the property tax.
Hmm.
This is great.
Yeah.
Oh, it's even got the
So we
loan
can,
limits on here. Man, this is
yep.
a
Well,
one-stop
that's why I say
shop.
like the entitlement calculator is real good because you literally now if they have their own certificate of entitlement that shows it makes it easier for you. Otherwise, it you know you can get a good estimate, but
Yeah.
uh,
And check this out. It's got on the right-hand side today's average rates.
there
That's
you go.
great.
Does it have VA too?
Oh yeah, it says VA. Oh, VA loan calculator. Now I
Let me
guess
scroll
this
down
is
a little
just
bit.
well, this thing
No.
is for it's locked in. I'll view more
Oh,
rates.
there you
Oh,
go.
there it is. Yay! That's so awesome. Well, it's no drop down. That's weird. Anyway, so that's still good
The
enough. Six point three
the
one
yeah,
eight.
the only thing mention on that too is remember like it's a general idea. A lot of the times, in fact, most of the time, what I've experienced is lenders will almost always include 1% for origination fee somewhere, whether it's registered as a discount or actually written out as loan origination. So whenever you're seeing those payments, it generally includes a 1% amount.
Gotcha. So
Wait, can you say
basically,
that one more time, please?
Yeah. So I don't know if you saw the other one. It said 6.3, but generally that includes paying, in addition to everything, a 1% origination fee,
Oh, okay.
or discount fee or something along those lines to get
yeah,
to that rate.
yeah. So
Okay.
it's not a par. It's par with a point. And this is Mortgage News Daily, which is the one like I like this one because it shows you like from a trend basis, which is great. VA 30, and it's got us at 6.43, it looks like 6.41. And then basically you say, yeah, that's not that 6.4. The other one has got us at 6.318. It's, you know, what is that, like a tenth of a point, like 100 bips difference? Still generally pretty good.
Uh, yeah.
Yeah.
Yep.
Yeah. So we've been fairly stable over the last, week. Not too crazy. Still floating in that six range. Yeah. So both of those are pretty solid. All right. Let's go back to this guy. All right. We covered a lot of ground there. So we talked about the fees that are on here. Something that's important for you guys to know as well is this when a person asks for a pre-approval, these are all the things that are going into it, right? And something you need to know is when a person puts in an offer, they're expected to pay closing costs, which is it's broken into two different pieces. One is just the fees, the cost of doing business to hire the escrow company, to pay for the appraisal, to pay the notaries, and all those people who do a service one time. The other part of it is the prepaid items. It's prepaid taxes, prepaid insurance, and stuff like that. Uh, that gets put into an account and like essentially pads their upcoming fees over the next 6 months to a year, right? So the lender, before they write that loan, they want to make sure a certain amount of money is in the pot that they can draw from to cover those costs. So it's almost like putting in a deposit on an apartment in a way. That money goes into that account and sticks around there. That's generally about 2% of the purchase price of the home. Some places it's higher, some places it's lower, but for a realtor, that's a good enough baseline that you need to work with. For a real accurate description of what the closing costs are going to be, including the points to buy down the loan and like what the expected taxes and insurance and all that'll be, you need to go to lending, and lending can give you the breakdown on that stuff. That matters because you need to know when they write that offer how much the how much credit you're going to need if you're asking for credits from the seller to cover those expected closing costs for people. If you tell them it's going to be 2%, but you're in a really high tax area, like up in Temecula, you got like Mello-Roos or CFDs, which is just basically additional property taxes. Well, that can go to 3% real quick. And you don't want to be in a situation where they can't close a loan because there's not enough cash to close a loan. So that's something else that when you have a conversation with the lender and you get your pre-approval, generally they're going to be shopping in the same place. I mean, early on with the buyer, they might start in one city, one county, and then, be all over the map. But by the time you start getting real serious about putting in offers, they're generally zeroed down to like a select neighborhood or a couple that are familiar with. So at that point, like you need to have a good idea of what that's going to be. You get the pre-approval and you see the total breakdowns that way, and then we know how much to ask for in credits to put the offer together. And all these things are included. Now, once a person does get that purchase offer accepted and we get into escrow, the deal has officially kicked off. Within like 3 days, they're getting a copy of this, and it's a truth in lending piece. So they can see exactly what they're expected to pay. Well, not exactly, but damn close. Like 98% this is accurate because some of the numbers they won't have just yet. But then they're going to see this again, like 3/4 of the way through escrow. And then they're going to see it a third time when they sit down to sign their final closing docs with a notary, right? A lot of people look at these things and they just sign it and they don't read through it. But you can't say that you didn't see it. So the first time they get it, it's a loan estimate. Second time they get it, it's a closing disclosure. Third time they get it, it's a closing disclosure again, but they're officially signing it as part of their loan package. And it might be altered a little bit at that point. So it's important to see this. They might have questions about what some of these things are on there. You either defer that over to escrow to help them sort out what some of these fees are, especially if they're talking about what the title and escrow fees are, or you kick it over to lending and have Dom walk them through what's the appraisal fee, the MERS registration, blah, blah, all those questions. Try not to get yourself caught in that trap of trying to speak for what these things mean. Just push it out to the people that it belongs to.
Yeah, I think that covers it well. I think what ends up happening, I mean, most of these on here, some stuff shows up, some stuff doesn't end up showing up. Tax status research fee is on here. It's not a real fee that we charge or we have or anything like that. It just exists on like a smart fees things. It's just an estimate that the computers kick out. So that doesn't exist. The ones what you're talking about, the loan estimate, your closing disclosures, both the first one that you e-sign and then the following ones that you sign in person. Um, those are going to be more accurate as to the information that's on there. This is just kind of get you an idea and to get you close. Usually within about 500 to $1,000 or so, we're pretty close to it. But especially in this stage, we don't even know who the settlement company is going to be. We don't know what their fees are going to be, what they're going to charge,
Yeah.
any of their added pad-ins, whatever.
Because every escrow company can charge a different rate, right?
Yeah, they
Somebody
charge whatever
might
they
do it
want.
for 500, somebody might do
Yeah,
it for 1,500. We don't know.
right.
And that's
Yeah.
why it's in the beginning, it's an estimate. And then as you
Yeah.
get further through the escrow process, we start to fill in those blanks with actual numbers because a lot of these are just placeholders. And
Yeah.
we get actual numbers toward the end. And then by the time that they actually sign all their final docs at the closing table, it's pretty much spot on. Now, what
Right.
if, Dom, there's some type of, overage or it's usually an overage, right? Because they usually pad it. What happens with that difference in the dollar value from the time they sign the final docs to when it all closes and settles?
Yeah. So yeah, if they've padded it on their end, you'll usually see a decrease in total cash to close, or if they are doing it, if they put some earnest money deposit back, they might get some of that back.
Yeah.
It kind of just depends on the situation. But yeah, if it decreases, they also see the decrease on their end. They
Yeah.
feel that they get that.
So
As
they'll
far as
get a check for the
increases,
difference. It's not like it's going into the ether.
correct. Yeah, they feel that in their pockets. It's a good thing. As far as the other way around, once I send this out to you as a loan estimate, Unless there's significant changes, most things cannot be changed on here, more than 10%, if at all. For instance, the title settlement agent fee, once we know who that is and we have their actual information and I send it to you, they can't increase it. They can't be like, well, we just actually want to charge you more now. Like, that's not,
Gotcha.
you can't do that. Same
Gotcha.
thing as far as locking the rate. Once we've locked the rate in, like we said before, it stays the same. So, if I say this was a locked loan estimate, it stays at that 0.749. Where that could change would be is if we need to increase or decrease the rate for various reasons. We locked it in at 6.5, but really want 6.25, and you want to pay some more money to get it down, we can do that, and that can change. It just won't happen arbitrarily.
Yeah. So let's just play that out in real time. So we're cruising through, we're halfway through an escrow, and then the buyer's like, I really would like a lower monthly payment. Is it too late? At that
Yep.
point,
No.
you as a lender can say, no, we haven't closed the loan yet. This is what we can offer, right?
Yep, that's correct. And when we lock it in, we lock in the whole or the whole sheet for the day, right? So
Yeah.
we locked in the 6.5. All of the other options to buy it down are still the same options now. You can still
Yeah.
lock it in, or we can still change it to that one, and it stays the same for that day, even if
Yeah.
rates have continued to increase. You lock the whole sheet of rates for that day.
So that I
Um,
think that's a very important thing that you put up is you
mhm,
didn't lock a rate. You locked a sheet, meaning when you locked the price to raise or lower that interest rate as well. So let's just say you locked on a day where your par was 7%, because that's pretty close to what this probably is. So you locked in
yep,
par at 7% with an option for a 6.5 rate at this cost, and the option for a 6% rate at, call this $9,000, or the option for a 5.5% rate at like $15,000, or the other way where you could do like a
right,
7.5% rate and you get 2 grand back, or an 8% rate and you get like 4 grand back. You locked in that whole spreadsheet, that whole menu for that day. So
yep,
even though you're halfway through the transaction, you still have the ability to choose from that menu, and that is locked outside of what's happened in the world, whether rates went up or down in the outside world.
that's correct.
Perfect. And then the only times that you really couldn't do that is if there was just no cash, not enough cash to make it happen, right? Like
Yeah,
we found out the appraisal came in low and now we can't get the seller credits we needed.
yep,
And, we can't do that.
yep.
Uh,
That's a great example.
Another question for you, and I hate to bring this up because I know it's a sore subject, but say somebody is, they lock a loan with you and then rates get better, but they can't float the rate down with
Hmm.
you because they didn't get better enough.
Hmm.
What's to stop them from grabbing another lender that's going to give them a better rate on that day? Can they essentially just substitute you for Joe Schmo?
Sure can. Yeah.
Like,
You
wow,
just
wow.
gotta hope. You just gotta hope that they can close on time and your transaction doesn't fall out because of that. So
Yeah,
the reality is that someone's got to do that introduction to the new lender, and you have to hope that doesn't scare off the seller. Anytime you start introducing new people, you can absolutely do it. It's happened. It doesn't happen often, but it does happen every once in a while.
yeah,
But again, especially if it's in the very beginning, it could happen, and that is what it is. Later in the transaction, the seller's going to get real itchy and probably not want you to be able to change lenders,
yeah,
at least without talking to
yeah,
the lender, whoever that is. Um, but yeah, until you close on the loan, you can absolutely do it.
yeah. Now
Loan
that
contingency,
money
I'll say
that
that.
goes along with locking the rate,
Hmm.
lock and shop means they pay money up front, but just to
Right.
lock once they got a purchase agreement in place, they're not paying you anything, right?
That's correct. Yeah, we
So nothing
we don't
happens
receive
until
anything
closing.
until we actually sign. That's another thing. People get super weird, and you should read all of your documents all the time and make sure that they're all correct before you sign them. But It often will happen where we receive information or we haven't gotten all the information we needed. For instance, like I would absolutely send this out if I needed to get this out in time, even if I haven't gotten the fees from the title rep yet, because we just need to get this out and get it started. Because for us to get it into our underwriting team, you have to sign your LE. So if you don't sign your LE, the underwriting team won't even look at it. So all of that to say, I got something. I was going there. Dang it happened again, Matt. It
Your
happens too often
ADHD
now. I'm getting
train.
old. Um, Gosh, where was I going with it? LE, sign it. Oh man.
Yeah. Once that LE goes out, well, you can't even like going back to the appraisal, you can't order an appraisal until your LE is signed, correct?
Technically speaking, the answer to that question is yes.
Can but
You have
shouldn't.
to have something signed by the person that is buying the buyer that has the intent to proceed.
Got it.
Can someone go onto the website and submit the information in ahead of time? Also, yes. The risk is if they back out and you don't have that, then you're out the money.
Mm.
Otherwise, when you sign the intent to proceed, you're agreeing to, because again, we make that payment up front for them. You're agreeing to then make a payment if you don't move forward with the transaction for
Yeah.
the appraisal.
Yeah. So there, I mean,
So
basically
that's a risk we take.
yeah, it's an agreement for them to repay, but you're fronting the money. And
Right.
you're not
So
going to front that money until you have the agreement to repay.
Excuse me, Matt. You
yeah,
don't.
technically.
Yeah, Alan.
I have a question. So, if you had two agents, would that be added towards, the final, closing sheet?
Two real estate agents?
Yes. Let me give you an example. I don't know if you probably understood what I said, but um, about 2 weeks ago, Miss T and I went to this property. Um, it belonged to another agent. So if Miss T's customer wanted to buy that
Mhm.
house, I see under service you can shop for it. I see title, settlement, agent fee. That will be the original agent. Now, uh, let's say Miss T is selling,
Two different agents. A settlement agent is not a real estate agent. When we
oh,
say,
okay.
yeah, when we say settlement agent, we're talking about a title rep.
Oh,
Yeah, and that's for a title insurance policy. So that's completely separate from our
okay.
real estate commissions for the purchase.
So the realtor, the agent, the realtor, where the fees would that be reflected on here, or it'll be just like
Not at all. It's
after the deal?
completely separate from the loan.
Oh, so it will not reflect on this.
Yeah, and the way to like rationalize this and make it make sense is someone could pay cash for this house and none of this stuff here, most of this stuff doesn't apply. I mean, yeah, you'll still have escrow fees and things like that, but there's no lender, right? So if a person buys a house cash, the listing agent and the buyer's agent are going to get paid a commission that comes from the seller generally. And then the escrow fees and stuff like that will get taken out, but
Oh,
that's completely separate from what we do in representing people to get the purchase contract put together.
got you. Thanks.
Yeah, absolutely. Good question. A lot of these things, like these terms and some of these, you know, names and line items, they can be really confusing, especially for our clients, because just like you saw, it says agent on there, and the mind automatically goes to, "Oh, agent, that must be the realtor." It didn't. Completely different, and it's important to be able to classify those things in the right categories. I have another tool that I put together that I'll share with you guys when we talk more about escrow, but it lines out who all the players are, the escrow company, from the lender, from the real estate agent, and also has a breakdown on there about all the people that are involved. So you got the buyer on the buyer's team, you got the buyer, you got the buyer's agent, you got the home inspector, you got the lender, you got the appraiser, and then neutral in the middle, you've got the title company and the escrow company, and they're kind of like the referee. You know, they don't have a dog in the fight either way. They don't have an opinion. They just want to make sure they get the job. And then on the seller side, you got the seller, the listing agent, right? And whatever like repairman or termite company or whatever that they might have in place, to help get the home sold, make sure the condition is good enough, that sort of thing. So, you got those three camps, and every one of these people has a certain line item on some of these docs, and they have a certain relationship, in the transaction. And we'll go over that stuff a little bit later on to make it more clear. In this case, all right, so we've talked about appraisals. We got a good understanding of that. We talked about the breakdown here and what they're seeing with a lot of these costs. So let's flip gears real quick, Dom, and talk about actually Kayla and Isaiah specifically for this house that they're looking at. So I'm going to pull up the MLS and let's look at this house they want to buy, put this deal together.
Grab some water while you do that.
Yeah, sure. Just so you guys know, anytime you're getting ready to put in an offer, there's a punch list of things you need to do first. One, talk to lending, get all the numbers lined up, because representing a buyer, the lending is like 40 to 60% of this whole thing, depending on, like how much work they require. So if you don't have the financing portion of the deal really figured out and have a good relationship with the lender, it's really going to show cracks when you get into escrow, or even when the listing agent starts to ask you qualifying questions about your offer. So you need to be like lockstep with your lender. Second thing you need to do is run a CMA to make sure that that property is worth what you're offering for it, or has the ability to go up. That way you can roll in those closing cost credits and then be able to convince the listing agent and the appraiser that it's worth that value. That's all part of deal making. It's not just writing offers and sending them in. An offer that's just a paper representation of the homework that you've done, the deal that you're trying to strike with the listing agent. We're not in the business of writing offers. We're in the business of making deals. All right. Actually, anybody have the address offhand?
30916 Flint Rock.
Flint Rock?
Yes.
One word or two?
One word. There it is.
Little Winchester. This is in Jordan's neighborhood. All right, beautiful house. Have you checked the taxes on this one, Dom?
Yeah, so that's what I was saying earlier. I'm not getting anything back on taxes because I don't know if it's like a new build or a recently new build. So the thing that I use for figuring out taxes isn't able to pull it. So I
Where
just
do
use
you
one
usually
point
go to
five.
find your taxes?
I use Fetch,
Fetch.
which is it's one of the escrow companies that we have through WFG.
Oh, cool.
They have all the access to all of it. But this one is not pulling up like.
This is built in 2023. It should have something on taxes by now. I'm gonna do this the old school way. So I'm gonna go to the tax record and I'm gonna do the math on what it assessed for and what their bill was and work it backwards from there. Yeah, it looks like it's sold in 2024. Oh man, sold 6/1/2024. That's the only sale, huh? List price was $599, closing price was $580, so that's what it should have been assessed for. $580. All right. So sales history $581, and then tax assessment. Oh man. Yeah, so
Yeah, so
that's the
they haven't updated it yet. And that's what I was running into too.
gotcha. All right, so here's the estimated taxes. Why is that so small? Let's see if we can. Oh, I did it. Okay. Does any of this help you out at all?
No.
This is all your CFDs. So it doesn't tell you your tax rates.
Right.
$4,000. What if we go to the tax assessor's website? Still nothing there?
I did not go to the website. If we go there and there's something there, awesome.
Yeah.
But usually it pulls from there.
This is going to be really important because we need to know if we can even afford this thing.
I see you've changed your search bar to be ChatGPT every time you type it in.
Yeah, it's got a plug-in that you can.
Yeah, I have the same thing. I love it.
That's pretty great.
I love it
So
most of the time.
I wish it was Grok. Well, I know that if I need Google, I can just type in google.com and then click Google. That helps.
Yeah, I know, and I can, and it's just because I'm so used to it being Google that I'll sometimes do it that way. But
I've been through this before. Bills. Records index. Usually one like pay my bill.
Matt, can you explain us real quick again what you're trying to do? You're trying to
Yeah,
find out if there's taxes on the on that house, or
I want to know what the annual taxes are because part of what a person's monthly payment is it's principal and interest for repaying the loan, but
right,
it's also property taxes and home insurance. And
which is usually
every,
in the mortgage, right?
yeah, this is like, and even if a person buys a house cash, they still have to pay their property taxes every year. So
Right.
everybody who's going to buy a house wants to know what that's going to be.
Oh,
And it particularly matters with a loan, especially a VA loan, because when a person makes a payment to a VA loan, they're making the principal and interest plus taxes plus insurance every month. And that just gets put into a side account called an impound account. And that just builds up and builds up and builds up all year. And then at the end of the year, that money gets pulled out by the lender and paid directly to the insurance company. Well, the insurance company gets it twice a year, but the tax assessor gets it. Well, they get it twice a year too, right?
I thought it was
yeah, it's
once.
the other way. Tax
Yeah.
assessor gets it twice, insurance gets it once.
Gets there once. Okay. Yeah. So that money gets built up and then paid out for them. So that's going, how much the property taxes are on the property is going to determine what their monthly payment will be. And our guys can only afford a certain amount of monthly payment. So without that information, we don't know if we can afford to pay full price for the house.
But also, don't your taxes increase a certain percentage every year? I mean, mine does. I'm sure everybody else in Temecula.
Yeah. They go up. There's a, Prop 13 says that they're limited to a 2% increase per year. And that's not every year either. That's just a maximum that they're allowed to do.
Okay.
And they'll generally do it in an appreciating market. What the heck?
So that's a guesstimate you're trying to do now because you're going to older. Well, it's 2023, so you only have 24. Really, only 24, 23, and
Yeah.
24.
Yeah.
Yeah. What I can do if this doesn't work, there's another trick I can use. So the other trick I would use is man, that's huge. Is I can go up here to prospecting and I can click on another house.
Okay, I was gonna say, can you look at our neighbor? Yeah.
Mm-hmm. This is interesting. Are these all just not built yet? Oh boy. Yeah, this whole area hasn't really even been updated. It's not going to show me any parcels. Man, tax assessor needs to get on there. Shit, this is whack. Well, If that's the case, then that's not going to solve very much at all.
And it looks like that house that you're looking at was a model home too. When I saw older pictures, you still see the railing and everything. So
Yeah. Okay. Well, they got Melrose listed here, but I don't know what the area base rate is. So let's see. Something they should have a base rate listed. New property info, general tax information, assessment.
will the agent at this point know a little bit more about it? AJ something. His name is kind of hard to say.
Sometimes, yeah, sometimes no. Because listing agents are good at getting the listings, but they don't need to know that information to get the contract for the listing. So a lot of them just stop there. Um, Other really good seasoned agents will get out ahead of it and figure out what all that is because they know the questions are coming. Uh, Let me just ask ChatGPT. I like to just figure out the best I can because there's so many listing agents I talk to and they're just like they don't know and they just make stuff up and you can tell they're lying. It's like, all right, I'll just figure it out myself. Or they'll just flat out tell you to figure it out yourself. I know for San Diego, I can find the tax rates per area and it'll tell me, like, it'll give me a whole list of where they all are. But this website, I'm not as familiar with it.
San Diego is 200 years old.
Yeah. I mean, we could just say 1% plus 4,000. What would that be?
9 grand over 12 months,
I don't,
9,500.
I really don't love that. I'm gonna ask Grok. I don't think ChatGPT actually tried to answer that.
Could you 791, which I think is actually probably pretty close to what I put in. I did 1.5, so we did 2. Yeah, so I was off by 900 compared to that. So it's just using 1.44.
And I click the deep search button and see what we get. I like that you can see it thinking and figuring out like how it's trying to solve the issue.
Yeah. What does the think do? Is that the same as ChatGPT's reason function?
Uh, yeah, yeah. It's just light years better.
Yeah.
I'm such a fan of Grok. Like, it's not even close how much better it is. You guys thought you were going to learn how to type up an RPA. You didn't realize you were going to get
How to
a
how to do
college
that.
lecture on fucking lending.
Right.
But you got to have a strong foundation.
There you go. There's a factsbycity.com lists 9 point or 0.919 as the base rate.
That's important. That's the one thing that's missing. Like we can see what the fixed fees are, but we don't know what the base rate is.
Yeah. It's funny because you can see the effective tax rate, like Amwell's 1.44 includes all taxes, including mail arrears, but earlier it said that it didn't include mail arrears.
Yeah. And the effective tax rate is useless because without a purchase price value, that
Yeah.
effective rate's going to be wrong because it's trying to mix a rate plus a fixed amount.
Right.
If they can just tell me, like for sure it's 0.916, and I can look online and see that it's for sure 4,000 in fixed costs, I just need to be certain of those two things, and then
Yeah.
we can move forward.
Why don't you ask ChatGPT about that? Just say is the base rate 0.916 in Riverside or in Winchester? When you corner it in, it'll give you that info.
ChatGPT kind of lies to me sometimes too. I'll trick it and it'll lie to me, and I'll catch it in a lie, and then it'll change its mind because I know it's just trying to make me happy. What was it, 916? What was the purchase price of the house?
549. 9, I think. Yeah, 549.9.
It's usually not this difficult to find these taxes, but this makes for good education. I don't want effective.
We should be able to change the that number there to the 5, because when you buy the property at the 572, which is where we should land.
572.
Yeah, because that's what purchase price is going to go to.
It's just saying 1.44 tax rates. Effective tax rate. I wish it would just give me the base. So in either
Good
case, it was
catch.
like what, 7,000 or something like that.
At 1.44.
Yeah.
Yeah, something close to that. On what I sent over, I sent it 1.5.
Just to plus it up, just in case.
Yeah, because normally, we do like 1.25 down in San Diego, but up there, especially the ones that we were looking at before, I saw something like 1.7. So I was like, oh, we'll go somewhere in the middle here. But I think that, I mean, we're looking at one with a little bit more wiggle room at the 550, 570 range. So I felt decent about just doing 1.5, and it's a little bit higher, it's a little bit higher, and we'll just be able to point to the reason as to why it's higher.
And they make it hard just to pay your bill. This is really dumb. Just to give a stark contrast here. And I usually don't brag that San Diego is any better than anybody, but
Definitely better than LA,
yeah.
especially when it comes to traffic.
Man, they just redid this website. Don't tell me they've made it fucking worse. They really did. I want to. All right, give me something. They, they fixed it and made it worse. Oh my God.
It's wps.sdttc.com.
SDTTC.
Correct. .com. And I don't know if you have to do the web payments portion of it, but let's see what that pulls
It
up for you. Yeah.
did not
Do
work.
/ web payments.
So WPS
Oh, you had it there.
.st.
SDTTC.com / web payments / COSD treasurer 2 / search.
Yeah.
You
Thank
found
you.
it.
Yes, this is exactly what used to be a big green button as soon as you opened up their web
Yeah.
page. Pay my
Yeah.
bill. Gee,
Bookmarks, Matt. You've only got your zip forms up there. Come on.
yeah. Well, this is keep in mind I had 6 years of bookmarks on my Whistle Gmail, and I had to start
Mm.
everything all over. So a lot of that stuff's still archived.
Oh yeah.
Yeah. All right. So here you just type in your parcel number, and it'll tell you what your bill is, and you can figure it out from there. And then they used to have,
Mailing address.
yeah. Tax rate by area. This is what we need. Pay by e-check. Yay. Look up prior year taxes. Yay. This is Dan McAllister. How come? That was weird. It brought up some other guy's freaking tax. Anyways, uh, that's good enough. So you got an idea of what you're going to charge, right? Or what you're going to quote in there. It's like 1.5%.
Yeah,
And was it 572 purchase price?
that's correct.
572 flat?
Yes.
Come on. You can do it, little guy.
Yeah. I mean, you can change it. That's just what I put in here. I did 22,000 seller credits. But if you wanted to do 571 900, you could. As far as what I sent over, though, I did 572 flat.
So,
572. Is that all the extra fees and all that? Because here it was listed at 549.9.
yeah, we had to increase the purchase price and then ask the seller out of that larger loan that we're going to take for 572,000 to rebate us the 22,000 or whatever that we
Or
need to
later on.
pay for the rate buy down and the closing costs. So the
Oh,
seller's going to walk away with their 549, but we're going to take out a loan for 572.
or like you did 2 weeks ago with that house that was selling for 624.
Yep,
Okay.
exactly the same.
Thank you.
Mm-hmm. So we got 8580. All right, so we got the property. Let's go over here. Now we're gonna go away. Awesome, made me log back in. I had to make this bookmark because they make it so impossible to get back to your freaking zip forms login. They're like trying to force you to go through your MLS dashboard just to get to this. I'm like, dudes, no. I just want to go straight here. I love when people fix things and they make them worse than they were.
It's the best.
He's the best. All right. We're going to go to new purchase or offer. But I'm going to put in the property address. What is it again, Dom?
30916 Flint Rock.
30916 Flint Rock. One word. Flint Rock Street.
Lane, I think. We double check. Yeah, it's Lane. Winchester 92596.
What we're going to do to make life a lot easier for ourselves is we're going to copy this MLS number. Go to MLS Connect. Oh, well, that's dumb. Okay. Okay, that was weird. Let's do this again. Copy. There we go. SW is going to be CRMLS, not SDMLS. That's the regional MLS for our. There's two different platforms that people input data on in our region. If it starts with an SW, it's going to be the CRMLS, and we can test it by looking for the photo. Voila. If that is correct, all this stuff in here will get automatically filled out for us, and half of our job is done for us. So you can see it's got property address all the way through the zip code. We don't have to fill all these boxes out. Now we're going to go down here and click residential because that's the type of offer we're making. I don't have any templates saved. If I had templates, they would appear right here. I've got to go add new templates in, but the MLS has changed a lot recently. And active, because it's an active listing. I think that's what it means. I always click active. Who knows? And then you got this top bar up here that you're going to either use parties or documents. That's generally the only two tabs you're going to use up here. So first thing I'm going to do is go to parties. This is the listing agent. It automatically imported that. And because this is my MLS and zip forms, it automatically imported my name in here. So what's cool is I can go over here to the buyer, drop in the buyer's name, and I've got them saved in my address book already. Isaiah. I have to say it out loud because it's a hard one to spell. Save it, and it's automatically going to put Isaiah's name everywhere that the buyer's name belongs in the whole contract, so I don't have to do that 85 times. Buyer number 2, drop in Miss Kayla. And now she's going to pop up anywhere buyer number 2 appears in the contract. Now I'm going to go to documents. If I had a template saved, it would automatically populate with the documents I need. But since I don't, going up here to the right, I'm going to click all forms. I'm going to start filling in all the documents that I need. So I know I need a BRBC, which is the buyer representation broker compensation. What everybody's loosely calling a BBA. There's no such thing as a BBA. I know what you mean by a buyer broker agreement, BBA, but that's not a thing. A BRBC is the thing. Next, we're going to put in an RPA, which is the residential purchase agreement. That's the offer, what we call colloquially. I think colloquially is the right word. And then we're going to put in an FVAC. That's the FHA VA mandatory clause. And we would put in other documents if we knew that we needed a rent back, or if we knew this was a mobile home or was on a septic or something like that. But this one's pretty straight up, so I think these 3 docs will get us where we need to go. Now, all I got to do is click on any one of these, and it's going to take me to the workspace. I can start, doing what I need to do with these docs. So over here on the right, you got a whole bunch of these little doodads. You don't really need to mess with any of this, but the grab from transaction, versus the workspace. You notice I clicked on buyer representation, so that's the only one I put in the workspace. If I want to see all three of them, I just reach down here and grab it and slide it up. Voila. Now I can scroll through and see all those documents on my workspace. So I'm going to go right down the list and start filling this in. I got my two names, buyer, DRE number. It's already pre-saved because I've done this before, so it stays locked in. Date prepared is today. eXp Realty of California, Inc. I'm going to do an agreement that starts today and goes for 1, 2, 3. Click 19. 3 months. I'm doing exclusive and following properties only. 30196 Flint Rock.
30916. Yeah.
Yeah, that's exactly what I said. 30916. Winchestertonville. Anybody know what movie that's from? If I need to know,
Crickets.
what's that?
I said crickets.
Nobody knows. It's from Mr. Deeds. 30916. Location. I don't need to fill that stuff out because I have the specific property up here. I can do a blanket BRBC for everything. I just have to find it and then constantly like add it. But I just do a specific one for the property each time because it doesn't take long. Amount of compensation, I'm asking for 2.5%. Continuation period, 90 days after the representation period ends. If these people put in an offer on this place and they don't get it, and then 3 months passes, and then they go back with another agent and put in an offer on that property, I still get a commission for having shown them that property up to 90 days. So it extends my window of getting paid from 3 months to 6 months. I could put the buyer doesn't have funds to pay the broker, but it doesn't matter. Boop, 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 boop. Thanks for hanging out with us today, Dom. We appreciate you.
No problem.
By we, I mean me, but hopefully everybody.
Yeah, hopefully.
Broker compensation. And we can talk later on about what all these things mean in a more dedicated sit down. But for right now, we just need to get this thing going.
So, man, if I may ask,
You may.
how much? Thanks. How much would the buyers were credited for? Like, how much house can they purchase?
Yeah, in this case, I think they were tip top tapped out at 624. That was like probably the best deal that we could possibly make for them, getting that 24,000 in credits. And that all comes down to their monthly affordability. That's where they got limited. That's one of the big things for VA is it's all about monthly payment because there's no down payment component.
Right.
If someone was getting a conventional loan, right, and they were doing a 5% down, well, they'd be limited by how much cash they have for the down payment, as well as what the monthly is. So either one of those could hold them back from going to a higher purchase price. But with VA, it's just the purchase or the monthly value that is the limiting factor. And these guys, they're a young couple, they got debt, one of them's making really good money. The other one, I think, is just in school right now. She's going to make great money, but they're early to the game,
So can they afford the $3,500 a month?
In this case, yeah.
Okay.
How much is the monthly on this one, Don?
Yeah, let's take a look. If I had to guess, I'd say more than 0 for sure.
Yeah, be my guess.
Really dry humor, Matt. It's really only you that understands it.
Oh
Even my
no.
wife looks at me funny sometimes.
It's like that dry dad joke humor that I grew up with. It's perfectly my language.
Yeah.
All right. FHA VA mandatory clause has to match the purchase price of the home. If not, it has to be redone once you get into escrow. Is this all whack? I feel like I missed a bunch of pages on here. There we go. Purchase price 572. Close of escrow 21 days. Can we do it, Dom?
Yes.
Initial deposit 1%, 5720. Increased deposit would be if they don't have the full 5700, or they do have the 5700, but maybe it's going to be a long escrow for some reason, and the sellers are going to want us to put more money in the pot as time goes on as more protection in case we cancel. It pays the sellers more money for the increased risk of the deal not going through. That's pretty rare. Loan amount, fully financed, 100%. And it's a VA loan. I never fill out the points and all that stuff on here. Just leave all that blank, guys. There's no additional financed amount. There's not like a second loan or anything. It is a primary residence. It has to be per the VA. And you'll notice right here, balance of down payment. This thing is doing the math. It's saying, hey, 572,000 with a 5,720 deposit means 572 plus 5,720. And down here it's saying, hey, this is in parentheses. That means it's a credit back to the borrowers. If this were let's just say the purchase price were 572 and we were making a loan of 550,000, it's going to do the math over here and it's going to say, hey, that means we're going to eat up your 5720 deposit for closing costs, down payment, plus we need you to bring 16,000 to the table. So not closing costs, but down payment, right? But in this case, since it's fully financed, they're going to get that full deposit back to use toward closing costs. And just to remind you guys, closing costs are fees that you got to pay to the people to do the job and to prepaid taxes and prepaid insurance. Seller to credit, how much do we need? 22,000?
Yep.
And it says right here for closing costs, so we don't have to do anything else with that. That's fine. Right here, seller's going to pay us the 2.5% that we are charging our buyers. If our buyers don't have the 2.5% and the sellers refuse to pay the 2.5%, we either cancel or we do the job for free as buyers. We try our best to negotiate our own paycheck here. 99% of the time, the seller's going to pay that, or they're going to pay like 2%, and we'll figure it out. Verification of cash, down payment, loan application. We're going to leave all those at 3 days. Well, actually, it's attached, or you can click the button to do within 3 days. So we're going to attach all those to the offer. And our people are pre-approved. A pre-qual is nothing. That means the person that wrote them the sheet of paper didn't look at their income, didn't look at their assets, didn't run their credit. It just said, hey, you tell me how much you think that you're worth, and I'll give you a piece of paper that says that's what you're worth. It's not
I
worth the
agree
paper
with
it's
you.
rented on. Pre-approval means they actually did some homework and they can say, look, yeah, we pulled credit, we looked at their income, we looked at their bank statements. This person can actually make this loan. Fully underwritten is a little unnecessary. We get underwritten during the escrow process. To do one before going into the market is a flex, but it requires a lot of extra work from the lending team. And if they don't move and get an offer accepted on that property, then, it might have been a bunch of work for nothing. All right. Final verification of condition. We're going to leave that at 5 days. That's a final walkthrough on the property, meaning within 5 days of closing the house, the buyer gets one more chance to walk it and make sure the seller didn't burn it down, didn't steal the appliances, didn't, is actually moving out, or any repairs that we asked to get done have actually been done. And then if they haven't been done, we bring those up and make sure that we don't close until we get that addressed and fixed. You don't need to worry about assignments. Assignments are for investors. Just leave that part alone. We want to lift our loan contingency within 14 days. We want to lift our appraisal contingency within 12 days. And then we want to do all our investigations within 10 days because that's all the time you need to read the reports and do a home inspection. If you need more time than that, you can always ask for extensions, but 10 days is a good promise that we can initially make to the sellers. We don't yet know if they need a rent back or anything like that, so there's no need to fill any of this stuff out. And then all these things, these timelines here, we always leave those blank. Those are fine. All right. This next section here, we have to take a look at the listing and see what actually is in the house and see if there's any mention from the listing agent about what conveys with the property. So we'll check that out in just a second. I am going to take a quick restroom break and then we'll jump back on it. In reality, T, I'm going to need you to speak up on this one, but did this actually look like the way it looks, or is this the model home photos that they just used?
Hey, Matt, your mic seems distant. Maybe it's me or I don't know if it's everybody else.
Good call, sir. Thank you. uh, the question I posed was for Tawanda. Did you go with her over there, Alan? For
Over
this
where?
property?
No, I didn't see this one. I wanted to go this afternoon actually because it's down the street from me, but no, it looks real nice.
Yeah,
Yeah.
he didn't get to go to this one. Mm-mm.
Is this
He
the
went,
way it actually looks, T, or are these old photos from when it
it
was?
looks just like that.
Yeah. Okay. Great.
Yeah.
Oh, yeah. There's actually stuff there. This is a beautiful house.
Very beautiful house. Motivated sellers. They're tired of paying mortgage and they just want to leave.
Do you know? Do they need a rent back, or is there
Nope.
a solar lease on it?
So the agent that was doing the open house, she didn't know much.
Mm.
She didn't know much. She said she wasn't sure about the solar lease. She said that they didn't need a rent back, but she was a little confused. She didn't really know much.
Yeah. Can you get the listing agent on the phone right now and let's ask a couple of questions as we write this offer up?
All right, hold on. Let me see if I can pull it because I'm not. Hold on.
If there is a solar lease, we got to factor that into affordability, and it's going to change Dom's numbers.
Matt, on the the pamphlet that you sent us, it says that he said the solar is all paid for, but I don't know. I could be wrong.
The paper that they sent you?
Yeah, no, I
No, the
sent them
pamphlet
the
you sent
listing. The
us.
solar is paid for. I just don't know about the rent back. I sent them a
Oh,
copy of
okay.
the listing. Yeah, so the solar is paid for. I'm not sure about the rent back. Let me see if I can get her on the
Yeah.
phone.
And we need to figure out about what conveys for appliances if they're going to be leaving washer and dryer. That's mainly the question I have. Looks like we got fridge, stove, microwave, and that looks like a dishwasher down there at the end. It's pretty standard equipment for a new building. Yeah, dishwasher right there. Washer and dryer is usually a question. It's not something that is make or break for the deal, but it's good to know. That way you can put it in the offer when you send it and you don't have to revise it later. Or have people be upset. They're like, oh, I thought we were getting those. Now I don't want the house because it doesn't come with them. Which people be like that a lot. It's got AC. Lovely.
Hopefully everything is staying because it looks like it was a model home. So
Yeah, it looks beautiful. Whoa. That's what happened. So, stove, refrigerator, washer, dryer, dishwasher, microwave. It's probably good enough. All right, so natural hazard, I'm going to ask the seller to pay for it, and I like disclosure source. The clients don't care which one they get because they don't know the difference. But me personally, I like to see disclosure source. I like the way it reads. So that's why I'm going to ask for them to use that one instead of whatever else. We're not in a wildfire area, I don't believe. So I'm just going to leave Q2 blank. Not going to include that on here. Smoke alarms, government required point of sale inspection reports. I'm going to put on the seller, which these never apply generally, but if they do and something comes up, I want to have us covered that the seller will pay for it because our guys can't afford it. So it's a pretty easy answer. Escrow fee, like we saw on the breakdown a few minutes ago from the loan estimate, that is the cost for the escrow company. And we're pretty much always just going to put seller's choice because they're the ones that are going to choose anyway. It's just the way we do business in Southern California. You can write in your own escrow company, but they're just going to disregard it anyway. So. And same with title insurance company. When you get a listing, you get to choose who you want. Sellers have the power. County transfer tax, city transfer tax, and HOA, we all want to put on the seller. This has HOA, yeah? No
he said
HOA.
no HOA.
Yes. Yes, yes. That's freaking lovely. All right, and since that has no HOA, we'll just leave that off. Private transfer.
I sent her a text and a call, but I got a voicemail, so I just sent a text. So
Okay, no worries. Down here, actually up here, we're going to do a report. So this one is going to be we can just say termite inspection. Man, I really messed that up. Paid for by the seller. We can get that done for free through our guys. So if they balk at it, we're like, look, we just can't say that we're paying for it per VA guidelines. And then here I'm going to do section 1, WDO, wood destroying organism clearance. Why? Because the lender needs that according to the VA loan. Wait, before I misquote. So Dom, VA doesn't require section 1, lenders do, yeah?
Is the question that it has to be paid by the seller?
No, just that it has to be completed prior to the closing of the loan.
Yes, so they require section 1, they don't require section 2.
Got it.
The actual, well, all of it could be paid by either party,
Yeah.
but most people are under the impression that it has to be paid by the seller. And really, I mean, put it on the seller anyway because it's their house.
Yeah.
So,
And we don't have the money, so we don't have a choice
right.
in this in this particular case. Um,
What's section 1
also,
again? I'm sorry.
yeah, Dom, you got this.
Yeah, section 1. So section 1 is going to be basically just active infestation of generally going to be termites, or any sort of like rotting wood that is exposed to the elements on the outside, dry rot, anything like that. Um, that's your section 1 stuff. It's going to be those items. I think that's kind of a open-ended thing. Is that answer it, or you got more on it?
Well, I'll clarify a little bit. So section 1 is like we're talking active infestation, active, like presence of organisms or exposed wood. Section 2 is going to be items that, if left unchecked, will lead to a Section 1 condition. So I've seen Section 2 be called out for missing grout in tiles in a shower because if water continues to pool up, it's going to cause mold, and mold destroys wood and all that. There's probably countless other examples, but the Section 2 stuff, I mean, if we can get it covered, that's great, but it's only the Section 1 that really matters.
Thank you.
All right, so on here under addenda, we're going to add the FVAC because we did add that to the contract. This just says it's attached to the contract, so they expect to see it. If for some reason I send this package over and the FVAC disappears, this should tell them that it was supposed to be attached and they need to go find it. It's just admin. And then everything else in the rest of this contract is just it's just contract language. It's just spelling out the rules for the contract, which we'll do a separate contract class. Don't worry. That's a full on thing. We'll do that in conjunction with talking about how the escrow works at the same time. Okay. This gets automatically filled out when you do the MLS Connect button feature that we talked about before. Otherwise, you'd have to go dig all that information up yourself and put it in, which I hate to do.
Okay, she just called me. Her phone is breaking up really bad. She's about to send me a text.
Okay.
A rent back of maybe 7 to 10 days.
Okay.
Solar is paid off.
Utes.
She wants the contingency to be like 14 days, loan contingency like 14 days, 12 days for appraisal, and 10 days for everything else if possible.
Easy.
Wine country escrow.
All right, give me
And
a second.
Yep.
I'll type it in as you tell me.
Mhm.
I'm going to fill this out like as you give me the information just so we make it easy. Wine country escrow. I like it. That's good
I never
branding.
heard of that. Yeah.
Yeah. So escrow will be, all right, wine country escrow. Okay. Did she say title insurance?
Title will be Chicago title.
Okay. And you said rent back of 10 days?
7 to 14 days.
I'll just do 14 days. And if we don't need that much, we won't use it.
Right.
So right here, so you guys know, when we're doing a rent back, it's either 29 days or less. That's one category. Or it's 30 days or more, but it can only go up to 59 days. Because once you hit 60 days, now it's no longer an owner-occupied property. Now it's a freaking rental, right? And that's just according to real estate law. So 29 days or less means we're going to click the first button here, and that's going to automatically, you see it automatically generated this form, the SIP form, and then we're going to slap 14 days on this. Now, if we cruise over, you'll see right here, seller license to RIP. Seller remains in possession. All right, this is going to get attached to the purchase agreement. It's defaulted purchase agreement. And that's the agreement that is dated for today. So that's how they serialize these contracts to say, hey, when I said this form by date, this is the form I mean. Seller is granted a license to stay 14 days. Consideration, we're going to do 0.00 per day. Late charges, no late charges. Just going to be a free rent back. Delivery of possession fee. We're not going to charge a deposit. No deposit because the house is pretty clean. Seller agrees to pay for all utilities. We're going to leave that like it is because we don't want the buyer on the hook to pay any utilities. All right. And it says right here, keys, seller shall provide keys at close of escrow or if checked at the term of this seller license to remain. So we're going to get keys once they move out. Just leave it at that. Easy peasy. So that is all ready to rock and roll. I'm happy with it. I could put the seller's name in here, and to do that, I just look them up on the tax record. But I'm going to leave that blank and let the seller fill it in because they might have a specific way that they write their names out on their contract. I'd rather leave it blank and let them fill it in rather than to have to line it out and then redo it because it's wrong. So that's all good. I'm going to hit the save button. And then we're going to hit this prepare signing button up here. It's going to make life real easy for us. The signing name, I'm going to call this offer for 30916 Flint Rock Lane. And I'm going to hit the create button. Once the signal comes back from outer space. You're good. I'm going to add participants from the transaction. And you notice it already pulled that stuff right out because I already had their contacts saved in the system. I'm not going to sign for the listing agent. Never add the listing agent to the signing. And it's going to find where all these names should go into the system, and it's going to automatically plug them all in there. And you know it's going to work every time because it's automatic. Bing, bing, bing. Hit the next button. Don't worry about this. Just send it. You could change the sending order too, but it's just going to go to everybody one by one. You can change it to where it goes to all three people at once, but it's fine. So that's out for signatures right now. We're going to just keep an eye on our email, and it'll tell us when Kayla and Isaiah each sign it. And then when they're done signing it, I'll sign it, and then we'll package it up to get sent off. Congratulations, Alan. You made it through class start to finish. Well done, sir.
Thank you, sir.
Yeah.
Very interesting. So it was easy to follow. Thank you.
Good. We'll save this and throw it up on YouTube so you can refer back to it later, for inspiration or just to kind of remember some of the things we talked about.
Absolutely.
Yeah. Lee, how you doing?